What is up, beautiful people? Welcome to the Midday Show, or Learn How to Trade, formerly known as the Midday Show. That is your girl, Adara. I'm Sharif. And we're going to wait for the chat to populate so we can say hello to everybody. We'll take a page out of Sean's book and do the roll call, because he is the inventor of the roll call. Just waiting for things to come in there. Nobody really in the chat at the moment. There we go. Daryl Finch, Big Charlie Taff. We got Callum Mitchell Miller, Juan Padilla, Tai Tai. I like that name, Tai Tai. And we got the very famous dad trader, futures trader extraordinaire, Ponzi Fonzie, Darwin. We got John. Last time we had a whole bunch of Johns. Big Michael, Lloyd, Ryan, Mr. Lee, Andrew, and Jorge. Yes, we got Abel Gomez. All right, we got everybody coming in the chat there. David, Joe, Peter, Adam, big Adam DeLuce, my man. Big game coming up for Arsenal again on the weekend. How are you, Darren?
I'm good. How are you?
Can't complain. It's Friday, so we're good to go. Quad witching or triple witching or whatever kind of witching it is, or who knows. Yeah, we got a nice chill lesson for you guys today, much like yesterday's. It was not too complicated, not too technical. We're continuing with the theme of the week, entries and exits, and we're going to talk about how to get in and get out using some of the most famous chart patterns. We'll describe some of the characteristics of these chart patterns. We're gonna, as you can see on your screen, we're going to talk about double tops, bottoms, heads and shoulders, rounded top and bottom. And oh yes, the famous cup and handle, one of Michael Noss's favorite chart patterns. Let's get right to it because we got no time to waste. First and certainly foremost, we're going to talk about the double top. So recall from our previous lesson, the double top is a reversal pattern. It should be preceded by a nice move up. Then you find a key point of resistance, you come back in, you make a bit of a support level. That's kind of like the middle component of the M. The double top looks like an M, right? Why show you? Why talk about it when I can show you? Come to the screen if you're able to. It's preceded, as you can see here, by a nice move up. You find a nice resistance level there. You come back in, you form support to make that middle component of the V. You come back up. Now, most of the time, the second top will be lower than the previous top, which is fine because it's showing you that sellers are overwhelming buyers at that level, which makes sense because we technically here we're looking for a reversal. So it should be sellers overwhelming buyers. That's to be expected. So if you don't quite make it up, is that better? No problem. If you don't quite make it up to the very top here where you initially got up on the first top, that's quite fine. So what are we doing here? How are we doing this? All you're looking for is the definition of a neckline. And this horizontal blue line, that's the definition of a neckline. And what you're going to do is you're going to wait for that neckline to get broken on this attempt right here. So you establish the support level on that move down and to make the middle component of the M, and then you're going to wait for this side to come down, and that's going to be your entry, all right? Now, how do you know where to take profit? All you're going to do is you're going to measure from the top of the double top to the middle support line over here in the middle portion of the M, and you're going to project that down. You're going to measure that in terms of dollars, obviously. So the same way that we talked about measuring a bull flag from the bottom of the pole to the breakout area on the flag or the pennant, and then projecting that up, you're going to do that here. So you're going to measure from the top of the double top to the support area, measure that down, and that should be your profit taker. Your stop loss, now, this is where it gets a little bit tricky. If you want to become more aggressive, depending on where the support level is on this move down, you can either have it in the middle portion, so you measure the middle. So you take this entire area here, you divide that by 2, and then you put your stop loss in the middle, or if you want to get a bit more aggressive, which is what I would do, I would put it on the top of the M. You guys know how much I really espouse higher highs and higher lows. So if you were to make a higher high here, then that would mean the trade is invalid. By putting it in the middle, by dividing the length of the double top by 2 and placing your stop loss in the middle, it's completely arbitrary. It's not based on price action. It's a formula that someone somewhere came up with and said, well, this makes sense to me, let me go with it. So again, to summarize, because it's going to be the same thing for the double bottom. We're going to look for a move up for the double top. It needs to be preceded by a move up because it is a reversal pattern, not a continuation pattern. You're going to wait for a top to get established, obviously, and then you're looking for a defined neckline support level, and then for that neckline support level to get breached on the second attempt after defining the top component, the second top component of the M. You get in at the break of the neckline. Your profit target is going to be based upon the length of the double top from resistance to support. You're going to project that downward, take profit there. Your stop loss, in my opinion, should be placed on top of there, but that would give you a 1-to-1. But with this formula, you get a 2-to-1, and that's why it's telling you to divide the top, the length of the double top by 2 so that you can get at least a 2-to-1 risk reward ratio. My opinion is, you know, you're already likely to manifest some profit if it is an actual double top. So no need really to kind of hedge your bets and put it in the middle, but that's up to the creator of that formula. I don't necessarily agree. I'd put it on the top. Anything, Adair?
Yeah, I mean, I think it's an interesting that you're saying that like the risk reward principles will kind of vary with regards to like if you want to do 1-to-1
yes,
or a 2-to-1. So my other question then, or I guess observation would be, what if we break out like lower than the shoulder? Would it be wise then to like maybe leave a piece, or sorry, not the shoulder, I'm thinking head and shoulders already.
This part over here?
Yeah, so if we break below that, the more, like let's say we break out more than that arrow that we've measured, right? Do you think it'd be wise to like leave a piece for the dream or just take everything out at that breakout point you've mapped?
Hold on, so you're talking about, come to the chart, Phoebe. So you're talking about if it, after it breaks down this component over here?
Yes.
So yeah, I'm always an advocate of leaving a piece for the dream, man. Absolutely, because why would it just stop here? I mean, it's kind of a random area with which to select a stop. What you're saying is, you know, this is the minimum, I would say. And that's what I personally would look for. But yeah, as you know, the floor manager on here, Brenkels always says, leave a piece for the dang dream. And yeah, was that better? Oh, there we go, Fabian. Fabian's always killing it on the 1s and 2s, man. There we go. So that's really good that we can actually have that thing and then people can see us.
Oh, I love it, yeah.
Yeah, very smart. So this is the infamous double top. To summarize again, you're waiting for 2 peaks to get established. Typically, the right peak a little bit lower than the left peak, showing you that sellers are overwhelming buyers. You're waiting for that defined support level neckline area to break, and this blue area here would be where you get in below that support level. And then what you want to do is you want to measure the length in dollars from the top of the double top to the bottom of the double top, project that downward, and then have your resting profit taker right there. Your stop, according to this formula, is halfway the distance of the double top, but personally, again, I would keep it above the right peak, the right crest, as opposed to halfway. I feel halfway is a little random. Yeah, all right. Yeah. Any other questions from the chat? I think that's very straightforward. It's not really that complicated, so I don't think we could, I don't think there's gonna be too many questions about this. Lance is asking, how do we ask questions? Do we have to address someone in particular? Yes, sir. So you can tag myself. You can just type in @Sherif, CHERIF, and then it should populate the rest of my name. Or you can tag Adara @ADARA, and she'll see the red rectangle on her chat, and she can address your questions. So if you want to ask Adara or I questions, that's the way to do it there, baby. All right, so let's move on to the next one, which is the, believe it or not, the double bottom. Here it is.
What a shocker.
Right? Shocking.
Plot twist.
All right, so what we're looking for the double bottom is almost exactly the opposite of what we're looking at for the double top. You're looking for the preceding trend to be a move down, okay? This is a reversal pattern, meaning that it is reversing a downtrend. So the preceding price action has to be down and to the right type price action. And you're establishing 2 clear troughs, okay, for the W. And then you're looking for that defined middle area to be the area of resistance, resistance. And what you're gonna do is you're gonna wait for that neckline to break, the middle part of the W to break. You're gonna get long there. You're going to measure the length of the double bottom. So from resistance to support, and you're going to project that upward in terms of dollar value, and that's where you have your resting profit taker, your stop loss. according to this formula again, is going to be half the distance of the double bottom. But again, I would suggest to you to have it below the right trough. Again, you're likely going to have a higher right trough than a left trough because it's showing buyers are incrementally overwhelming sellers because the pattern is supposed to reverse. So it would absolutely make sense that buyers begin overwhelming sellers at that level. And then that's what you're going to do. So that gives you a 1-to-1 based on my approach, a 1-to-1 risk to reward ratio. But if you follow the halfway stop loss rule, that gives you a 2-to-1 to risk reward ratio. Hope that helps. See any questions in the chat? Where was that individual that wanted to ask a question? Pranaya isn't that the person who sent Sean the book? It is. Shout out to Pranaya, man. Your name is not auto-taggable in this chat. It did it in the morning. So I think if you're watching on your phone, if you're on mobile, and you hit @Sharif, it won't put the whole thing. What, Ram? Let me do it right now. Hello. All right. So can you tag me, Katina Man? Okay. So yes, now we can. Okay, there we go. All right. Cool. So I just had to, I guess I had to message in the chat first before I was taggable. My bad. So that's it. Put your questions in there. Sharif hasn't typed in the chat yet. Says verse. My bad. All right. Hello, everybody. So it's very simple with respect to understanding what you need to see for the double bottom. To summarize, it is a reversal pattern. You need a downtrend, so price action of down and to the right. You need an established support level where the troughs on the W stop. The right trough will likely be higher than the left trough, which is fine. And you're going to get long through the break of the neckline over here, and then you're going to project the length of the double bottom upward through the break of the neckline and have a resting profit taker in and around there. Your stop loss will either be halfway through the double top, or double bottom, excuse me, or through the right, or just below the right trough on the double bottom. Adara.
Yeah, there's actually a question here from Tai in the chat.
Tai.
Double top versus triple top, any difference except for the amount of tops?
Yeah, see, so double tops occur way more often than triple tops and triple bottoms. So I'm not saying that they don't occur, but you're more likely, much more likely to see double tops and bottoms than you are triple tops and bottoms. And so that's the reason that I was using these ones. Now, I didn't go over the triple tops and triple bottoms to see if the approach is exactly the same. My instinct is that they are. I feel there may be some differences with respect to the neckline breakout, because then you have two areas of, the V, the middle of the V, for example. Come to the chart. So this area right here, you're going to have two of these bad boys. So I'm assuming that they probably won't be at the same level, which makes things a little bit different. But that's not something we're not used to. Remember, on the head and shoulders, one shoulder may be higher than the other, or the neckline on one shoulder may be lower or higher than the other. So that's not unusual. You're going to have to basically work around that. I don't have the answer to that, unfortunately, at the moment. All right, let's look at some questions here, baby. Who's long Uber? I am. I'm holding Uber right now, nicely in the money, nothing great. We took the 63 break. I'm long 62.96. So holding it, nothing big. Just, No, live, right now. I know it's not showing on the position board, but it'll update once I wet my beak a little bit. Sorry, guys. I am long Uber, $62.96 on UBER. We'll see what this one does. James Pang, Microsoft at double top now on the 1 minute chart. Sure. What's going on with Tesla, Katina Man? The Katina Man is now short Tesla. For anybody following along with the Katina Man's trades, he has taken a short on Tesla. He posted in the chat a while ago. All right. I said short, yeah. Double top on Microsoft on the 1 minute. I would have to disagree with that. Not on the 1 minute. I don't see that, James. That's not what I'm looking for there. Ozan, if I can come back to my previous question, meaning of life. Wrong show, homie. You got to go somewhere else for that. What? 42. What does that mean? Oh, okay. I don't know. Why is 42 the meaning of life, guys? It's a book. Oh, okay. Come on, guys. Hitchhiker's Guide to the Galaxy. I don't know, man. I'm an uneducated slum over here. Live-oo. How about them Cowboys? How about them boys, baby? I just hope I have that same sentiment when I come in Monday. Otherwise, I already hit the fail. I hope I have that same sentiment when I come in on Monday. I won't be doing a whole bunch of exercise. Right here, right in front of me, but that's neither here nor there. Leroy Jenkins, Sharif, double bottoms are just visual representations of accumulation processes where sellers are being absorbed and buyers take over the market in that time frame. Cool, bro. Isn't that what I was just saying about buyers overwhelming sellers and sellers overwhelming buyers? Literally was just saying that. Thank you. Adam, important question. I'm going out tonight for Xmas Social. Do I get hammered or stay conservative for the body gains? Look, man, I don't know. That's a great question. Like, it is Christmas. You want to have a good time. But yeah, you know what? You're always keeping the gains in the back of your mind. How about a happy middle? I got to tell you, personally, my go-to drink, Adara, I don't know. I don't even know if you drink. I don't want to put you on the spot. But yeah, my go-to drink for non-hangover days the next day, vodka water and some lime. And because you keep,
fresh.
Number one, there's no sugar. Sugar exacerbates the hangover. That's number one. Number two, there's a lot of water. So you're drinking the water. You're helping, obviously, hydrate. And the vodka, if you get a decent vodka, the hangover, not too bad. So, good to know. Yeah. Oracle is flying, man, says, I can't read that name. All right. Oracle's flying for anybody interested. Jamie Carrera, is KO on a monthly double top? We can look. That's because it's on point. So have a look.
Knockout. Coke. No, I'm joking. It's Coke.
That's Coke, yeah. All good. We'll go to the monthly. Let me put in the ticker. No, I don't agree with that. Where's the double top, guys? We need discernible. It's got to be, I don't want to say it has to be too obvious, but it's got to be better than this. Like what I see here is higher lows and higher highs, followed by, this breakdown over here, which we saw because of that hit piece by the Bat Cave, right?
Oh, yeah.
Right? Remember that? What's it called? The Bear Cave.
The Bear Cave. I just laughed at the Bat Cave because,
right?
Same bad time, same bad channel.
This was, yeah, right? This was the breakdown of the Bear Cave little hit piece there on Coke because of the weight loss drugs. So, no, I disagree. I don't see double tops over here or a double bottom either. Reliable Rudy, it's important to stress having multiple strategies adding up before assuming a double top or bottom or taking any trades for that matter. I don't know if that means you stated this multiple times before. Yeah, I mean, obviously we're looking for confirmation on volume. We're looking for consistency in the price action. It's not so simple, guys. We're giving you a very, very rudimentary way to enter this. It's much more nuanced, but we have new viewers coming in all the time, so we have to, accommodate for where their starting point is. I know that you guys are a lot more advanced, some of you guys in the chat, and you guys use multiple confirmatory signals, whether it's using RSI, MACD, or what have you, other methods that you employ. Can't discount any of that. I would say for the novice, though, look for the breakouts on the double tops and bottoms. Let me just bring it in here. So, for example, what happened to my yeah, I know, right? Thanks.
You're on the spot.
Yeah, I know. We'll try doing this every day. For the breakdown over here, this is basically where I'd look for more volume, right? Where you have the actual breakdown and the continuation. Look for more volume on the breakdown of this channel. Same thing with the double top, double bottom, I mean. When you have the break of the neckline to the high side, look for it on above average volume. So use volume as a confirmatory indicator. Tilran, in terms of stop, do you just put it very close to the double top or give it room to breathe? So I just finished explaining this. I literally just finished explaining this. So let me explain it again. Okay. So, yeah, that's fine. We'll just explain it again. Here it is, okay? This is the length of the projection. So when you look for where to place the profit target, you're going to measure from the neckline to the top of the double top, and you're going to project that down. This green line here represents where you're taking profit. With respect to stop loss, there's two schools of thought. One says you can divide the length of the double top by 2 and then place your stop loss halfway between the top and the bottom on the double top. Or you can become a little bit more aggressive and put it on the right, above the right crest. That's my preferred method because that's based on price action, not some random, measuring distance and then dividing it by 2 and saying, well, the stop loss won't come to here. So that's what I'd say. I'd say you'd have to place it above the right crest. That's just my go-to move on that. I hope that helps. Anything that you have or anything that we can move on?
Yeah, no, I think it makes sense to have like the stop at a discernible level, right? So because otherwise it's kind of arbitrary. And then how do you know if you selected it? Like, are you selecting it at a random dollar level? Because there's not even like there's a clear higher high or higher low there. It's just like in the middle. So yeah, I totally get what you mean about like just finding that higher high and using that.
Yeah, it is. Uber is going. Neil putting that in the chat. We're nicely in the money on that one. All right, guys, we are brought to you by Search Trader. Account funding of up to $1 million. Keep up to 90% of the profit. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the folks there at Search Trader. Okay, let's move on. Oh, by the way, they still have their trading contest there. Okay, so Michael Noss was talking about his $2,200, by the way, in an Amazon gift card for the trade ideas one, the Search Trader one offering $1,000. So there you go. 2 contests that you guys can join there. All right, let's move on to the next one, the head and shoulders pattern. This one is the interesting one over here. It's a bit more complicated, more measuring to look at. With respect to head and shoulders, it is like the double top, like the double bottom. It is a reversal pattern, meaning that when you see a normal head and shoulders, not an inverse head and shoulders, it needs to be preceded by an up and to the right price pattern, okay? So it has to be a bullish trend that is about to reverse. So what precedes this area over here has to be up and to the right. All right, now what defines the head and shoulders is 3 distinct peaks, with the middle one being distinctly higher, distinctly different than, shout out to Obi, than the right one and the left one. So what you're gonna do here is you're gonna look for the break of the neckline. Now, sometimes the neckline can be a little diagonal rather than being horizontal because the trough on the left shoulder might be a little bit higher or lower than the trough on the right shoulder, okay? So what you're looking for, that's completely normal. I would measure from the breakdown on the right shoulder. So this breakdown over here, not this one. Wait for it to break down below this level. Then you're going to do the exact same thing you did with the double top and double bottom. Measure from the top of the head to the bottom of the neckline. You're going to project that downwards, okay? That will be your profit taker. So that's where you expect to take profit. And then again, this one's telling you to put it above just halfway between the breakdown on the right shoulder. I would say put it either above the right shoulder or above the head. All right, that's just my personal look on that, but you can trade it however you want. So to summarize, it's a reversal pattern. It's preceded by a move up. You're looking for 3 distinct peaks: left shoulder, head, right shoulder, and then you're looking for the break of the neckline. You're going to measure from the head part of the pattern to the break of the neckline. You're going to measure that downwards from the breakdown area. That will be your profit taker. That's where you rest your profit taker. Your stop loss either goes above the right shoulder or above the head, up to you, depending on what your risk appetite is. All right? Any questions?
Yeah, I mean, we sort of have a head and shoulders on Netflix, which is why I entered Netflix short, because I saw some people mentioning that in the chat. But this is also why you kind of need to enter later, because I would say I entered too early, and that could be the key to my downfall here. I'm not getting out until we see a new higher high, because we're holding this 471-ish area pretty well. But basically, yeah, I got in because, I would argue, on this 5-minute chart, we did have, here's the head, shoulder, shoulder. Now it kind of looks like we have a shoulder pad. The shoulder's like beefing up a little bit here. But yeah, I mean, and then this would kind of be the neckline, right? So I should have waited until we broke below the neckline instead of getting in slightly above, because now I would argue, I probably got in a little bit early with regards to risk management and making sure that we do have confluence for this pattern. But yeah, so that is, I would say we kind of have a little head and shoulder here in the Netflix. And as always, You know, if people see patterns in the wild, feel free to put them in the chat.
Yeah, absolutely.
Because we like looking at them. Yeah.
Yes, absolutely. Thank you for reminding me about that, Dara, because nothing better than actually seeing something in the wild.
In the wild.
Yeah, I hope to see some live animals in the wild. I've been looking at my safari. Yeah, I've been looking at that. I still haven't decided which one to go, but there's this company called Exotica with 2 A's at the end, and they have all these different like safaris. You can have like a glam safari, you can have like a foot safari, you can have a car safari. So there's all these different options. It's awesome. And then depending on what animals you want to see as well, meaning which country you're going to go to, because not all the animals are all in one country. That's neither here nor there.
That's cool.
But the wild thing kind of got me thinking.
Yeah.
Leroy Jenkins I was just adding that all these reversal patterns represent the process of accumulation, distribution, and if we focus on those mechanics, then all the patterns make more sense. Thank you for your input, Leroy. I agree with you. But today we're kind of just keeping it to the entries and exits component of the patterns. We're not talking about all the different facets of the patterns and how they're derived and what they mean. We're just speaking specifically all week, as we have been, about entries and exits. So we gotta kind of make it more streamlined. But thank you for your input. That makes absolute sense. Elon, Sharif Adera, hi. Quadruple C, excellent example of head and shoulders both on the daily and the intraday short. You wanna have a look at Quadruple
absolutely.
C? What? They're amazing, Katina Man. Absolutely. You don't know about this? Okay, I'll tell you guys in a second. That's not accurate, Katina Man. That's inaccurate. I'm about to tell you right now once she's done. Yeah.
Yeah, I mean, it's a very kind of dramatic head and shoulders, but yeah, I would argue it's kind of present. We have a shoulder, we have a head, we have a shoulder. I think because it's a small cap gapper, it does look a little.
Actually, I'm not gonna.
Yeah, no, it's a good look. And
is that the daily or is that the 1 minute?
5 minute.
5 minute. Okay.
Yeah, so this one, maybe the 3 minute is a bit, just because these candles are wild, because, yeah, small caps gap. Yeah, it's kind of a shruggy shoulder as well in the 3 minute. It's a good look either way, Elon.
A deformed left shoulder.
Yeah, it's like, but yeah, no, I appreciate you bringing that one to our attention. I think, yeah, it's an interesting one too, because even though it does look kind of deformed, because we have these really intense candles, it's a nice look, and we appreciate the input there.
Yes. Okay. So we gotta talk to the Katina Man, the Neil here for a second, because they were saying that the gorilla. Katina Man says like, I don't want to mess with no gorilla in the wild. And look, I can completely understand that perspective. But what the Katina Man doesn't know is that these park rangers sit there for years acclimating the gorillas to human presence for one specific reason: ecotourism. It's either that or their habitat gets cut down. So they're going to have to generate money from the forest in which they live. Otherwise, sadly, what ends up happening is they cut all those forests down, they sell firewood, they make houses with it, or they make farmland, and these gorillas have nowhere to live. So what happened was they actually had to go there for years. I'm talking about park rangers. Go there for years, sit beside the gorillas, bring humans with them so the gorillas could get acclimated to the presence of humans. And even when you go there, you don't want to spread human diseases to these gorillas, so you're always masked up. And the gorillas just walk amongst you, right? And like they eat, they're sitting there foraging and eating around you, and you're sitting there watching them. And they're used to you because they've been acclimated to your presence. Not all of them are like that. It's certain gorilla troops that have been acclimated to the presence of humans. And, that's not to say that the silverback isn't going to test you, especially if you're a bigger dude. He's going to come around you. Sometimes they nudge you in the back. Sometimes they'll run in front of you to kind of show their dominance. Obviously, they'll pound their chest. They'll do all that kind of stuff to let you know that they're in charge. So I just wanted to make that very clear, by the way, for people to think that I'm nuts and stuff, but I'm not. I love this kind of stuff. All right, we're pumping up nicely here on the NQ, and we just touched yesterday's high. So I set an alert. I'm going to have to digress from the lesson for a second here because the NQ is absolutely rocketing to the high side. I set an alert on my NQ so that when we touch yesterday's high, which is over here, 16,885, it would notify me. We've broken through yesterday's high now, 16,887. Look for possible resistance at this level. Okay, I'm not saying we're going to turn back. Say again, Katina Man? The Katina Man just added to his short on Tesla again. For those following along with the Katina Man's Tesla trade, be notified. But the point is, of what I was trying to say is, this move up into yesterday's high could present a good resistance level, especially because it's just a smidge below 16.9. We're awfully close to that 16.9 level on the NQ. Just want to digress quickly and tell you a little bit about that. How's the Uber trade doing? Let's find out over here. Where's my Uber screen? Okay, so we're printing nice on Uber. We're about 30 pennies in the money or so. Yeah, we're 30 pennies in the money. We're going to let this one run. I'm just going to let it run. It's not big size. 2 entries, one at 63, the other one at 62.80. Now we're at 63.30. What's up? The Tesla shorts printing over there, the Katina Man celebrating. So for those who are taking Tesla short, just covered some. So want to let you know about that. All right, let's move on. So we just talked about the head and shoulders. Now we're going to talk about the rounded top and rounded bottom. Let's go over here. All right, so this is the rounded top. Again, the rounded top and the rounding bottom, the what do we call them? Smiley face?
Oh yeah, the smiley face.
The roundy face.
Yeah.
These are also reversal patterns, guys, okay? So when you're looking at the rounded top price action over here, it should be preceded by an up and to the right price trend, okay? It has to be a move up in prices because it's going to reverse that. So what you're looking for here are higher highs initially. You see higher high, higher high, higher high, then you kind of plateau, and then you start getting the lower highs. So you're able to kind of discern, and this one is a bit more subjective because you don't really know where the neckline is. You don't really know where to draw the neckline. It's going to become a bit more subjective. Again, the same thing happens here. You're going to measure from the middle of the round top to the break of the neckline, project that down, and that's where your profit taker is going to be. Like everything else, this one is suggesting that you place your stop loss in the middle point of the difference between the top of the rounded top and the break of the neckline. You're going to place it somewhere in the middle. I would say to you again, place it on the top. That's how you know the trade is invalid, because you make a newer high, and that's it. So just to reiterate, these are the things you're looking for. Price trend to the high side, incrementally higher highs where you start creating this rounding effect, and then incrementally lower highs where you have a designated break of the neckline, or semicircle, whatever you want to call it. You measure from the top of the round top to the break of the neckline, and then you project that downward. You put your profit taker at the bottom end of that measurement. The stop loss either goes halfway over here or to the top. I would suggest you to the top. Very simple stuff today, guys. Shouldn't be hard to understand. A lot harder, let's be real, real. A lot harder to execute this stuff in real life, to see it in real time, but you're not going to be able to execute it in real life unless you know it exists, and that's why we're telling you about it. Anything, Adair?
I just think it's interesting too, because I think also, like, once you're kind of in the trade, right, and trying to trade the breakout, I like that this example too that we had here has examples of it like not going straight down right away. We do have some like as well after. So I think, yeah, like the whole idea of just making sure you get out when you see a higher high, because yeah, I still think it's very arbitrary the way they initially have that stop on the chart, like that little random line. So yeah, I think and also whatever risk reward ratio works for you as well, right? So they have their example. Sharif has like the higher highs, higher lows example, which I also think is valid when you're trying to plan a profit taker and a stop. But yeah, I think as you trade too, you kind of figure out what your style is. If you're going to trade patterns or pattern breakouts, yeah, just have in mind your own stop based on what that chart's been doing and what levels you're comfortable with. And even I found it really helpful when I'm planning my outs to kind of look at larger levels and larger time frames to see what levels are actually kind of trending.
Yeah, absolutely. Absolutely. Let's go to the chat, take some questions over here. Joshua, love your energy, guys. Should we also use the pre-market chart for tracing a pattern? Great question, man. Great question. And the reason it's a good question is because I suspect all price action not done with a decent amount of volume. That's obviously a very subjective term. What's decent, right? Well, it's relative to the particular name, right? I mean, what is the relative volume for Apple? What is the relative volume for Microsoft? So I'm always suspicious of pre-market price action and aftermarket price action. I tend to care more about what the price action is between 9:30 to 4, and specifically, I really care about the closing price. Great question. I don't have an answer to that. I would prefer, obviously, that we trade during regular market hours between that 9:30 to 4. I think that you're going to get better results with that. But obviously, if you have a lot of volume in the pre-market for whatever reason, because there's an outlying event, there's a news catalyst, whatever, then obviously it has to be taken with more respect. But I would always, champion trading and basing your patterns during regular market hours. I hope that helps. Ozan, Sharif pulled a Neil Roberts and said, "Let's be real." I didn't know he said that a lot. My bad. I don't like to steal Neil's sayings, but I didn't know I did it there. All right, let's see what else is being asked. Day Trading Singh says, very important to point out that execution is the difficult part. On paper, I'm up $2 today. In reality, 50 cents. Absolutely accurate point. Thank you for pointing that out, Day Trading Singh. We are only really talking about the chart patterns here. We're not talking about the psychology at all. That was the topic last week when we discussed trading psychology, essentially all 5 days.
Yeah.
And the Katina Man and the Neil chimed in, remember that? On their trading psychology experience.
That was really cool, yeah.
And I think that it was really well received by the chat. In case you're wondering what day that was, I think it was Thursday or Friday. Go back, Thursday, right? Yeah, you have better memory than me. Go back and check it out. The Neil and the Katina Man were spitting hot lines during the midday telling us about their experience and their trading psychology suggestions. You guys don't join every day sometimes, so we want to tell you about that one. Go back and pull that up. That's the awesome thing about YouTube, that you can just do that. All right, so let's go on to the next one. So rounded top and bottom. Now we're going to talk about cup and handle. All right, let's pull up this bad boy over here, show you guys the chart. All right, the cup and handle pattern is similar to a rounded top or rounded bottom, except it has a second smaller little dip after it. This thing over here, that's what we're looking for. The second smaller curve can resemble a flag pattern kind of, because it dips and then it moves back up. So don't confuse it with a flag pattern. You usually will kind of know that it's what the preceding price action was, right? If it was a rounded thing like this, you're gonna know about it. You can think of a cup and handle like a double top or double bottom that's followed by another smaller double bottom, a little bit like this one, delaying the beginning of the uptrend, not preventing it. This one is also a reversal pattern, okay? So with the cup and handle, what you're looking for here for a bullish cup and handle is you're looking for a downtrend. It has to be preceded by price action going down and to the right. Then it starts forming this base over here, where you initially have incrementally lower highs and lower lows, and then you start getting higher highs and higher lows. And again, like the other pattern, what's it called? Like the rounded top and rounded bottom, it's kind of hard to define the neckline a little bit because it's going to be really based upon where you think the top of the cup is. So it's going to be a little bit subjective in that sense, but you should be able to manage it. And again, you're doing the same thing here. You're measuring from the bottom of the cup to the top of the cup. You're projecting that upward from the breakout area, and that's where your profit taker is going to be, right around here. Your stop loss, again, halfway the distance between the top of the cup and the bottom of the cup, but I would suggest you to likely put it below the cup. That gives you a 1-to-1 risk-reward ratio. But if you're less inclined to take risk, you take that 2-to-1 by placing it in the mid area. Very simple stuff today, really not complicated. The measuring thing really here is the only novel thing.
Yeah, I actually do have a question.
Oh.
So I guess if the cup and handle we're saying and the roundy face are virtually the same, then so the only difference is basically this handle here. So then I guess, I'm sorry, what I'm trying to ask is, how does its breakout vary then from the rounded top? Is it not basically more or less the same as a rounded bottom, sorry?
It's on my screen. Sorry, Fabian, it's on my screen, yeah. Is that good? Okay. Can Can you ask one more time?
So is
Because
it
Fabian
not?
was talking.
Yeah,
my
sorry.
bad.
So is
Yep.
it not mostly more or less the same as a rounded bottom? Then the only difference is the handle, because you're still going to be trading the breakout.
Let's put them together.
Yeah.
Let's put them side by
Because
side.
I was kind of thinking of that. And
Yeah,
that
you're
would
not
be-
wrong. You're not wrong
Like,
at
is
all.
it any more or less
So
bullish? I
the
guess,
only
because
thing
the
that
handle.
is the difference, let me zoom out. What the hell is this thing doing? All right, one moment, guys. And please don't play that sound effect again. Right, so all you're getting is this new dip.
Okay.
So flip this one around. So this is obviously a rounded top, but imagine it was a rounded bottom, okay?
Yeah.
All you're really getting with the cup and handle is this extra little dip over here. But notice that the dip doesn't make a newer low, right? So this is the lowest low, and then you get another dip over here with the cup and handle. It makes a higher low. So that's the only difference between the cup and handle and the rounded bottom, whereas the rounded bottom won't have that cup handle, but it shouldn't change anything, Adira, because you really haven't messed up the pattern, right? You're looking for a reversal. So when you're looking for a reversal of a downtrend, what are you looking for? You're looking for higher highs and higher lows, and you're getting that exactly here because you're getting that cup, the handle part, pardon me, is creating a higher low. So it doesn't change anything. It just adds, one little variable that you need to be, you need to concern yourself with.
Thank you.
And by the way, I should mention that sometimes they look like V's. Like, look how Michael Noss always shows me charts that are cup and handle or rounded bottoms that look like V's, but he draws his own little cup around them, right? A little roundy thing around them. So, a little roundy thing around them, yeah. Very scientific.
I have another question, sorry, too.
Go for it.
So, also I read somewhere the more V-shaped they are, the less bullish they are. Is that real? Specifically for the cup and handle, not necessarily the rounded top or rounded bottom?
I don't know the answer to that
Okay,
question.
sorry, I was just wondering if it was like a common thing or just something I read.
Yeah.
And then, sorry, one more question. Can you have a reverse cup and handle, or is that only
Absolutely.
Okay,
no,
cool.
absolutely. You can have, so all these patterns, they work in the inverse because fundamentally they are the same. It's just in one scenario, sellers overwhelm buyers, and the other scenario, buyers overwhelm sellers, but they are identical. They reflect the same type of human sentiment. It's just a reflection of human sentiment reflected on a chart.
Okay.
That's all that it is. Market sentiment, not human sentiment, excuse me. Yeah. Well, maybe it is kind of human sentiment. Well, there's so many algos now, who knows?
Thank
Elon,
you,
Neil and I were chatting about ARM and Rivian when they handled a cup weeks ago. I don't know what that is. Handled a cup?
Maybe they made a cup and handle?
Maybe. Yeah, I don't know what that means. Oracle in 5 minutes is exactly that. Let's have a look at Oracle. All right. ORCL. Oops. Today is every bit of Friday. Oh, very nice, my man. Very, very nice. I don't know how to say your name because it's just a little complicated for me. The only thing, though, that I would have to disagree on is that it's not preceded by a downtrend. We know by definition that the cup and handle is a reversal pattern, meaning what? It's not a continuation pattern. In this case, the preceding price action is up and to the right, not down and to the right. I'm not saying it's not going to actually manifest and continue forward, but what I'd say here is you're not looking at a cup and handle pattern, you're looking at an upward channel, despite the fact that it may look like a cup and handle. You have higher lows and you have higher highs on both. In fact, it's continuously making higher lows and higher highs, except it just got a little bit more aggressive in this area over here. I'm looking at the monthly. Did he say 5 minute?
He said 5
minute. He said 5 minute.
I didn't super see it on the 5 minute.
I don't see it on the 5 minute.
Monthly, I see it, though.
No. I saw it on the monthly, but it was not to the right pattern. I gotta tell you the truth. So no, I don't see this on the 5 minute. No, this is an upward channel. Yeah, this is just a straight word upward channel. You have higher highs, you have higher lows. This is Oracle 5 minute, guys. Yeah, I gotta disagree with that.
Oh.
Is Palantir making a reverse cup? You mean cup and handle pattern? Sure, let's look at Palantir. All right, so what do we got on Palantir here? Yeah, okay, so that's a nice little pattern there, especially on the micro. You got a nice move up, so it's a reversal pattern. Yeah, okay, I see it a little bit. I mean, it's breaking down incrementally. Yeah, I'm not, it's possible. Possible. Let me look at it on the 1 minute. Yeah, the 1 minute looks a little bit better. Yeah. Yeah, that's a good look there. Who was that mentioned it? Ihsan. All right. Yeah, so, yeah, nice look, nice look. A lot of noise. You got a double bottom over here possibly, and then there's a break of the double bottom. I would say this is a nice double bottom pattern, actually. Interesting. Okay. So that's basically it. I mean, there's not much to discuss today. We want to keep it light. Friday, we're talking about entry. Yeah, light and frothy, baby. Exits, entry and exits on a Friday. Simple stuff. All chart patterns we've talked about in the past. And yeah, that's it. Anything to add, Adair?
Yeah, I think too, the thing is, like, they're not always going to materialize how you think they will, is the big thing I'm trying to learn, because, I've had some moments where I've thought something is kind of going to work out. You get in and then you just have to be cognizant and realize, like, hey, something happened, get out for now, and then if you want to get in later, you can't. Like, there's nothing stopping you unless you really, mess yourself up, and then you can't get back in, right?
Yes.
So I'm very lucky to still be in the sim, but for example, we had this Netflix head and shoulder. I thought was a head and shoulder, kind of, because we were up on the day. It's a reversal pattern, so we had one element. We had a pretty defined neckline. We had a shoulder. My issue was I should have waited for the break of the neckline to get in. Instead, I got in way too early. Then I kind of had to get out when we made this higher high. Now, honestly, we kind of still could have like a little bit of a topsy-turvy shoulder. So now it's kind of a matter of, had I waited for the neckline, this could have gone according to plan. I literally took a teeny tiny amount of shares on this. So nothing too dire. But yeah, I think, very grateful to be in the sim so we can kind of test these patterns. And I think like the realization, especially this whole week, like sometimes your entries and exits, even if you plan them, they're going to go awry because things don't always have to work out how you thought they will. And I think that's where risk management really becomes an important element. Also, BlackBerry in the chat here, I like this. The bottom of the cup normally goes with lower volume. Like the calm below, before the storm, it can help detect a cup forming before it's accomplished. I did not know that about, but yeah, I guess volume is really important with, like, especially breakouts with volume, right? So that's interesting to think about lower volume there.
Absolutely, I agree. SPY 1 minute failed cup and handle. So if it's failed, why are we looking at it? All right, let's move on. SOXL in trend, let's look. And what trend? What's going on here? Thomas Jefferson, what's the best time frames to identify these patterns? Does it matter if you're day trading or looking for plays the next day or week? So all these patterns, the beautiful thing about them is they're all fractal. Okay. Now they may have a higher failure rate on the lower time frame and more success rate on the higher time frame. It doesn't mean that they're not applicable on all time frames. They are. You can look at them on any time frame you want, but the higher the time frame we're looking at, the more likely that they are to succeed. Hope that helps. Day trading, Singh. Adara, it's a numbers game. 2-to-1 win ratio with 50% win rate, and you're golden minus the fees. Yeah, that's what we were talking about that the first week when we talked about how to manage risk. We talked about risk to reward ratios and the benefits that come with that. HR, how about your thoughts on BA? Massive move. Let's look at Boeing.
I just said because like Boeing.
Yeah, fantastic look on Boeing. It continues to really benefit from that Dubai Air Show and basically has been rocketing up since the market bottomed end of October. How many red days here do we have since October? Let's count this, okay? So November 1st is this candle over here. We got 1, 2, 3, 4, 5, 6. 6 red days since October. And how many green days? Where is it? Hold on. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. Wow. 26 red days to 7 green days to 7 red days since the end of October. It has been a very good time to be in Boeing. It's almost up $100 off that bottom. Was at 176. at the lowest point in October. Now we just got to its high a day. We are at high a day right now on Boeing at 265.17. That is the high day. Great look, man. Breaking through previous resistance. Look at this. This 240 area over here. Essentially 240 was the high that we made in August, and we haven't been up at these levels in quite some time. So where do we find resistance? Well, we just broke through this area of resistance over here at 260 that we made back in March and May of 2021. The next level we're looking at is that peak that we got to in March of 2021, which was that 278, almost 280 area, but that was on a wicking basis. The closing print there was actually 270. So Boeing is literally $5 off that multi-year high resistance that we've been dealing with for quite some time. Look at this double bottom.
Ooh.
That's a double bottom.
Ooh.
Yeah. No, Chilean. Oh, can you? Oh, he had it. I didn't see it. Yeah, very cool. I love that.
Very neat.
Yeah. So the beautiful thing about this double bottom is that it's actually preceded by a downtrend down and to the right. Okay, so it reverses the pattern here, and then you get that neckline break, and then you get that consolidation at the neckline too. So that was the nice part about it. You could even say that this was a cup and handle almost. And then look at that. Subsequent to that, where were you at that level? If you got in here, and then look at this, Adara. This October low that we made, look how it corresponds to, isn't that lovely? Isn't that lovely? So we know that this is the resistance level taking us back to August of 2022, and then that low comes right back into that resistance level. Tell me this is a mistake. Tell me this is by accident. Great look there on Boeing. We are now out of the money on Uber by about 8 pennies or so as it rejects that $63.30 area, and then it comes back into the 62.80. I want to see how it acts around VWAP. VWAP on my chart is around 62.60. I'm going to basically hold this all day to see what kind of move we get. Not too much size, quite frankly, so it's not going to be a big deal. All right, anything else? Elon, hey Sharif, we hope you are still able to trade and make money while spending so much time on teaching us over the last month. Negatory. It's okay because I just do it on my personal account, no big deal. Desi, Sharif, what do you think about NVIDIA swing for the end of December? I'm good size long call position. NVIDIA is forming a similar consolidation zone like AVGO. Would it be nice to see a breakout? Is AVGO creating a consolidation zone? I thought it was rocketing up.
It hit a new all-time high today.
Yeah, so what consolidation is this on AVGO? Well, we'll have a look at NVIDIA for him in a sec, but I just want to see the chart on AVGO. This is the chart on AVGO. It's an absolute rocket. We're all-time highs, like Adara just said. The resistance level that we had at 1,000 absolutely got demolished.
That was a strong resistance area.
Yeah, right?
We consolidated there, I would say we're consolidating. Now I would not say we're consolidating.
Yeah, we're in a definite uptrend here where you definitely have higher highs and higher lows. Let's look at NVIDIA. Let's see what they're talking about. This is a consolidation zone. Yes, very, very nice observation there. I would have to agree. You have that 500 high. Like, I mean, it's not a strict level of 500. It's not, because you had breaches over here back in August, and then you had another breach over here in late June. And then you obviously have the support of 400. So you have a $100 range that's taking us back essentially to the summer when we broke through that $400 area. When did we initially break through it? We broke through it in June, but we really didn't touch 500 until late August, late to mid-August. So absolutely agree with you. It is within a $100 range. It's a big range, but it's a range nonetheless. So great observation by you, Elon, there. I would have to absolutely agree with you. Now, like we talked about when we talked about trading channels, the most rudimentary way to trade channels is, first of all, to establish that you are in a channel, and then wait to the extremes and get longer short. So if you were to get short at 500 initially, over here, you printed about at least $100. If you got short 500 over here, you printed at least 50 bucks because it made its way back into 450. But what I would say is keep your eye on higher lows, because that could be the indication that we may be breaking through the channel. Like on these occasions, we had 3 touches all at 400 after making that $500 touch. Now we didn't get down to that 400 again. We got down to 450. So are buyers overwhelming sellers now incrementally? And that's what you need to keep your eye on when you are in that channel. Okay. So shout out to you for noticing that. It's a fantastic look there on the daily on NVIDIA.
Yeah. Also, Hogwriter in the chat, Netflix short would have printed. Yeah, so it was a head and shoulders on Netflix. I just got in too early, and this is why I think, like, you know, thinking about where to enter patterns matters. I did get in too early. I got in before we fully formed a shoulder. We only had half a shoulder at that point. Then we made a whole new shoulder, a full shoulder, and then I kind of got out because we went way above where my risk reward kind of was. But yeah, now it looks like we're going to maybe break that neckline. I might get back into this 470 in a tiny amount of shares should there be an opportunity, but I do not want to go FOMO chasing this one. We're not here to chase waterfalls, but I still do like that 470. It's kind of that's kind of a strong neckline here. But yeah, so this is actually a decent head and shoulder in the wild. And I just, you know, I am in the sim. I'm very lucky to be in the sim. But yeah, this is a good example of what not to do, I guess, when you're trading patterns. So I will let that be a lesson because I got in here too early because I thought we were going to break the neckline here, right? Because I thought this was the shoulder. But then we made a higher, like the shoulder kind of finished out. Do you see what I mean?
I do, but what I see is a bit of a compression there, don't you?
Oh, okay.
What do you think about that one?
Well, because
I do see the head and shoulders because you got a go back.
Yeah.
You have the left peak and the right peak are clearly lower than the middle peak. I agree with you on that, 100%. But did you wait for the neckline to break there, Dara?
I didn't, and I said that was my issue.
Well, here, you said that, my bad. And now you're getting that nice move down, like so. Oh, interesting to see if we actually get that neckline break. That's a good look.
Yeah, like I said, if we break below this 469.70, like in a defined way, I could be enticed. But yeah, I think you're right. Like I think this was maybe more what the shoulder was because I was reading this as the shoulder, and that's also where I kind of had my issue because I saw us going down from this point. I viewed that as the shoulder, and then we did.
Gotcha.
Yeah, I appreciate you going over that with me.
Gotcha.
I still think it could be a short, but yeah, we'll see.
Absolutely, yeah. And Netflix has been strong lately, so I mean, it can give back a little bit, no big deal. In case you're wondering what's going on with Netflix, it is slated, according to some analysts, to overtake Disney in terms of advertising revenue next year, seeing it is the biggest streaming service. So, you know, they've been waiting kind of for a while to quantify that, to commodify, not quantify, their size. Being the biggest streaming service now with the new ad tier, they're obviously able to generate more money per user than they could if you just paid once a month, right? So, all right. Interesting look here on the future. It's 12 o'clock, so we'll restart the lesson in just a sec. But like I was saying, this is why I had the alert here on the NQ. When we got into yesterday's highs, we rejected that 16,887, came back down to 16,850. But most notably, we did make a higher low, okay, on the future. So this is something to take note of because we could break through 16.9 today if this pattern continues. The previous low was at that 16.8 1/3. Now the low is 16.8 1/2. So you've got the higher highs right there, and you've got the higher lows continuing here. So be on the lookout possibly. But look for how we do at 16.9, right? You know these 100-point levels, they always seem to be support and resistance. Whether it makes sense to you or not, this is just basically what happens. We've rejected off, temporarily I would say, rejected off yesterday's high, but we're still a few points, 13 points below 16.9. I'm talking about yesterday's high, 13 points below 16.9. So let's see what we do around there. Tony Arts. Sharif Adair, hey guys, any advice on patterns that you see on XOM? Trying to learn patterns? Sure. Let me just have a look at XOM. Move this bad boy over and bring in this side chart. XOM. What's our friend Zom doing today?
Zom.
Yeah, Zom. Okay. So, with respect to Zom, this could possibly be a bear flag. Doesn't have to, or bear pennant. No, bear flag. Doesn't actually have to be that way, but you know, make note of it. Why? Because you have that big move down, and then you have that kind of consolidation area, and then you look for a break through the bottom of that consolidation area. So here's the consolidation area. We'll draw it out with horizontal trend lines. So it gives us about a 50-point range from that $140 area to that 190 cent area. And so big move down. So we know a bear flag is a continuation pattern. So get that big move down right at 925 before the open. You consolidate sideways, and we have a bit of a flat bottom here at 1040. Look for a possible break, but it doesn't have to manifest into that, okay? But what I would say to you is that oil has been quite weak lately. So it's not unusual to be a little bit biased here in your perception of what the pattern could be. Like, if I see a bear flag on a day when, on a Mag 7 name, when the NQ is up 1%, I should be a little bit suspicious of that bear flag. But because the context in which we're talking here, oil being very weak lately, I look at a bear flag, to me, you know, it may have a bit of a higher probability of breaking down. So that's what I'd see there, possible bear flag. Otherwise, it's a sideways consolidation. You want to start with the list?
Let's do it.
What I would suggest is I'll put up the images, unless you want to put up that area. Yeah, unless you, because the images really help there, right?
Okay, yeah.
Yeah. Can you right-click on the image? See if it allows you to do anything?
I am
no,
not allowed to,
oh,
unfortunately.
Crap. Okay, no worries. I can put them for you.
Thank you, I appreciate that.
The first one is a double top, right?
Yeah,
Okay,
so let's start with double tops. We're gonna bring it back, rewind it, and reverse it here. Double top. So that is a double top pattern. It is a reversal pattern. It is also a bearish pattern. And it's what happens when we're in an uptrend for that stock or that asset or what have you. And then the market price has reached 2 consecutive highs with small declines in between. So we have a high at the top of the triangle, triangle A, then we have another top high at the top of that triangle, and then we had a little bit of pullback in between. And if you can't really see it as well in the chart, and I like this example because it's not super triangular unless you actually chart it out and draw the lines here, then you get a better sense of the tops, right? So I think this is a good example that not everything's gonna be perfectly triangular in the wild, as I like to say. But yeah, so it will form kind of an M shape when you draw it out in the chart as per that example. It's a bearish reversal pattern, so it's thought that the asset's price will fall below the support level. So the support level is this line here that forms at the breakout between the 2 highs. Yeah, thank you, I appreciate that. And so it's crucial to confirm the support level because basing your trade solely on the formation of the 2 peaks can cause a false reading. And you're going to confirm the support level by seeing like a breakout below that area.
I sent it to you in the chat if you want to click it.
You.
That way you can have it up on your screen. Yeah, there you go.
There we go. Thank you so much.
No problem.
So yeah, here we go. So let me do some zooming in.
Shift and then the mouse button. Oh, sorry, control and then this
plus?
thingy here, yeah.
Okay.
Like, look at this.
Oh, that's way, that's way easier
Yeah,
than what I was doing. Oh, there we go. Hello. Okay.
Hello.
So, hello chart. So yeah, look. Oh, now I can click. Okay, here. So this is when we say, I'll zoom out a little bit here. There we go. So you can see trade the breakout. But yeah, so basically what we're doing here is, so you have the 2 peaks. Let's say we're in an uptrend. Things are going splendidly. And then you see we have these 2 peaks with a little bit of pullback in between and this really strong support area, this breakout area. So you want to wait before we do the breakout. You want to see some support here. And maybe to confirm a potential reversal, look at some other indicators, as we've said, right? With all of these patterns, it's always nice. Multi-time frame can be nice. Maybe you see another bearish reversal pattern on another time frame, or maybe you look back and you're like, oh, this whatever area is a huge area of support or resistance, or in the past, right? Like this has been a key area. So just look for other options there. But yeah, so then basically what you're going to do is you're going to chart this, and then you're going to measure what our breakout was between the kind of, not the neckline because we're not head and shoulders, but between the support area and between the peak. You're going to measure how much of a period that is in dollars or cents, or depends on what asset you're trading, or points. And then you're going to trade the breakout. So you're basically going to try to get out here. Your out is going to be the distance that you measured here. So this distance of the move to the upside will be your out. And then also, you could maybe get part out and save a piece of the dream, as we were saying. But in terms of like basic charting, you would just like to get out here. So they suggest that your stop loss should be set in this mid area. We were kind of saying it seems a little bit random or arbitrary. So maybe look at yourself. What's your risk parameter, right? So if you have a little bit healthier risk appetite, you're a little hungrier, you might want to get out at your risk appetite might be like, the double top, right? So that could be where it is. So it'll be like a 1-to-1 risk to reward because it'll be the same measurement here, right? Or depending on what the dollar amount is, maybe there's a really key dollar amount on that stock that you're like, oh, this will be kind of where I want to get out, right? So, kind of figure out what works for you, for your trade, for your risk appetite, what have you, but that would be the situation here. Also, someone's saying here that Tesla is forming a double top. So I'm gonna pull.
Let's have a look.
Yeah, let's pull that up.
On what time frame did they?
I see it on the 5. So.
Okay.
Yeah, it's around this 253 area as well.
Let's have a look.
Yeah.
On the 5. On the flip side.
Got 5 on it.
Yeah. Yeah.
Sort
double
of.
top.
Yeah, double top. They're kind of.
But we're guessing at this point, no?
Yeah, that's true. We don't have like a full breakout. Yeah, that's true.
Yeah,
it's just like the start of a double top.
Yeah, so that's the thing, right? We look, there's nothing wrong with anticipating like this could form into a double top, but I think that it's not so we're not going to be that delayed to actually wait for it to actually form and to take the break of the neckline. So what I see on Tesla here is a higher low and then coming out maybe to a flat top of that 253. You have a lot of resistance at 253. You had it in the pre, you had it right at 1030, and you're getting it right now. So for whatever reason, 253 is the top. That was also the consolidating area in the pre-market from 4 a.m. till around 7 a.m. So we had 4 hours of trending at 253. So a higher low over here with a flat top usually is a bit of a wedge. And so look for, especially if the market starts flying through 16.9, you could get that 253 break.
That's true.
Okay,
yeah.
look at all the wick. First wick, second wick, third wick, fourth wick, all at 253, all the while making a higher low, right? Yeah. So I personally, let's not guess if this is going to be a double bottom, maybe a double top, maybe it ends up being a double top, and that would be fantastic to see one in the wild. But let's look at what we got so far, and what we have so far is a higher low and a flat top. So if anything, I'm feeling a little bit more ascending wedge-ish.
Yeah, that makes sense. Thank you for talking me through that. I appreciate that. And I was saying too, the thing I'm trying to work on too is I feel like I have this thing where I'll just kind of see what could be kind of part of a pattern, and then I just kind of look back and zoom out, right? So I think if you zoom out, yeah, I appreciate what you said there with regards to the higher lows there.
Absolutely.
Yeah.
Great question, Magic Mike. I'm not sure what because he starts his comment with "and." So maybe did he say anything before that? I'm just looking quickly here.
Oh, I think it's with regards to Tesla.
Oh,
it might just be like adding on to what you had to say about Tesla.
Got it. Okay. And it was already well formed double bottom. How would you deal with this contradiction? I don't see a well formed double bottom. Are you talking because this was a trough and this was a trough, and this being the neckline? It could be, right? Or it just could be an ascending wedge. So not everything what we're going to see on the chart is going to be a pattern anyway, right? So,
yeah, that's a good thing.
Yeah, I wouldn't be so confident to say that this was a double bottom because especially the levels are like well off each other. I mean, we're talking about 248.25 and then 250.15. So, almost $2 separated between the bottoms there. I would be hesitant to call this a double bottom, Magic Mike, but yeah, that's what we're here to do. We're here to talk and bounce ideas off each other. Go ahead, Dara, sorry.
Yeah, thank you. Yeah, so now we're going to talk about the double bottom, which is, perhaps unsurprisingly, it is the opposite of a double top. It is literally the flip side. So with the double bottom being a bearish reversal, we have a bullish reversal here on the double bottom. So that Boeing chart earlier was a really good example on the daily. I'll actually pull that up because I think I was actually charting Boeing earlier just for for myself because I saw that we had an upgrade earlier. Or no, sorry, not an upgrade. I think it was a price target increase on Boeing earlier, and so that's why I pulled it up for myself. But yeah, the day chart on Boeing is very pretty. Yeah, this one continuing to fly to the upside.
Fly, birdie, fly.
Okay, where now? Let me zoom out and find this.
What's up? You want me to bring it up on mine?
Yes.
Fabian is such a troll. He's always trolling us with his sound effects. All right, let's bring it. I'll bring it.
Because I know
it's
there
right
was
here.
a double bottom.
Here it is. Here it is.
Thank you.
Okay, so what Dara's talking about is this bottom over here versus this bottom, with this being the neckline, and that's the breakout. And just to prove to you how important this neckline was, this neckline break, look where the support level comes in when we tank off this high at 240. We come back in to that 175 area, exactly where we broke out from.
Yes. Yeah. So that's a really good example of like a really clear double bottom. And for some reason, because I was looking at TradingView earlier, I was like finding a harder time finding it on the P Pro 8.
Yep.
But yeah, still very much there. Also, yes, Chris picks the let it fly was a pun. The pun was intended. I appreciate that. I have a problem. It's all good. So yeah, it creates a double U shape, as you can see with with Boeing there. Really clear example of that Boeing double bottom. And so yeah, it shows that we've made, the market has made 2 attempts to break through a support level and then failed. And in between, there's been a temporary price rise to a level of resistance, which creates a W shape. So the Boeing is an example on the daily. Obviously, these can happen intraday as well, but the Boeing, I think, is a really clear daily example.
It is.
And then also, I like how, too, going back to our Boeing discussion, the support area is now kind of became an area of resistance.
Dang.
So that, you know, I don't know if that's always going to be the case, but I think it shows that beyond just patterns, it's nice to have confluence or other kind of areas where we have intersection, right? So obviously this is more after the fact, but it shows that not only do we have this double bottom, we had this double bottom at what would become a key area for Boeing. So
obviously we don't know it, like over here, we don't know that it's going to do that. But when it comes back down into that level and we look ex post facto and we look at that, it should give us confidence in the level. And that's what I want to say.
Yeah, no, I appreciate you saying that. And I think like it just kind of shows like in retrospect how you can look back at this double bottom and use that then when you're looking at like looking at this area of resistance, right?
Absolutely,
so I just think that's cool in retrospect. But yeah, so basically it'll signify the end of selling pressure and a shift towards the uptrend, as it very much did with Boeing, as we discussed earlier. So if the market price breaks through the resistance level, because it's such a key resistance level, it's likely to continue rising. Which is absolutely what we've seen, right? But like with a double top, as we were saying, it's really nice to confirm that resistance level before you open your position. You want to see what other indicators you're doing. You want to see if there's any other patterns, maybe different time frames to see, is this an actual level, or am I just, chasing a dream that isn't there? Am I just chasing pavement, right? So you want to make sure you do have some confluence or confirmation there. You're going to trade it. Now we're also going to talk about head and shoulders, not knees and toes, just head and shoulders for right now. This pattern consists of 3 highs. So the central high is the greatest. It'll be the largest, forming the head of the pattern. And then you'll have 2 lower points, which are going to be the shoulders. And so all 3 highs should fall to the same support level, which is going to kind of be the neckline, right, for the head and shoulders. And
Tesla is a good example for that right now.
For head and shoulders?
Yeah.
Okay.
On what time frame, Fabian? Oh, the one we were looking at. Okay. Okay, let's bring it in. I'll do it. I got it right here. Go ahead. Keep talking.
Yeah,
I'll load it up. Yeah.
So like the it's a bear. Okay, sorry, where it was. So all 3 highs should fall to the same support level, known as a neckline, and the first 2 will rebound. So they'll bounce off that support level, and that's how you can kind of discern that it is a support level, right?
Yeah.
Because things are bouncing off of it, and it's holding pretty firm.
Are we on head and shoulders?
Yes, we are in head and shoulders. Yeah. Sorry about that. Yeah, and so the thing is too, it can be a little crooked, it can be a little lopsided, that support level, but it should be more or less, kind of in line. And then you also, as well, you can have shoulders that are slightly lopsided. And we were saying too, it's interesting.
I sent it to you.
Oh, thank you. You were telling me as well that there is some kind of correlation with regards to, or at least, thought to be a correlation, where if you have, I guess, the depth of where we have the trough here, the second trough, can actually show if we're going to go further down, further to the downside, right? You were saying, sorry, what did that?
That's fine.
Okay.
Let's see what you're talking about.
So I know you were telling me that I believe that depending on how far the trough goes, that can actually be more. Bearish,
yes,
right?
Okay, so the book on John J. Murphy's book basically was saying that if the right neckline, the right side of the neckline, so point to the right side of the neckline there. I can do it. No worries. Fabian, can you come to my chart? My screen. There we go. So if this side over here is lower than the left side over here, it can mean one specific thing. If the left side is lower than the right side, it can mean a different thing. Now, it can show the aggression of the breakdown. It's not a hard and fast rule. There's only been really one major study done about these patterns in the wild. And, it was obviously a certain time frame that this study was done on, but the one that did, I'm not sure exactly what the result was, but it said that there would be a different result if the left side, so the trough of the left shoulder, was higher or lower than the trough of the right shoulder. And so it would give statistically a different result, whether more bearish or more bullish. I'll have to look that up. But that wasn't really what we were talking about today, so I didn't get a chance to look at it.
It's okay, yeah, sorry.
But what you were saying is right.
Yeah. No, so just kind of an interesting thing with regards to that pattern there. But yeah, so what is happening? Apologies. Yeah, here we go.
I can send it to you.
No, it's okay. I'm all good to go. Okay. Yeah. So you want to kind of see, as we can see here, we are seeing all of these little troughs falling to this area of the support line, which is, pretty clear. Also, again, this is another case where if you actually, and I like that they use this example because it's not super clear unless you draw it out, right? Because we did have this one wick to the down, or this candle to the downside that was, a little bit more outsized, right? But we still hit that support level. So I like that they do show, as you were saying with like the example of Michael Noss, like even if we have a triangle, he'll draw it a little bit rounder, right?
Yes.
So I think like it's how you chart it is really important. So I like that they actually did draw this out here. And so then what you want to do is once you see your two lower highs followed by the larger high in between, with this strong support area, the support will eventually kind of become a breakout. It is a bearish reversal pattern like the double top. And so the market basically has hit a resistance level it can't move past. But then what you're going to kind of do here, they say, so you're going to measure from the support level to this top, and that's the breakout you're going to trade. So they have this kind of random area as your stop loss. But as we were saying, it's going to depend on your risk appetite. But it kind of also makes sense to do maybe like a 1-to-1 risk-reward ratio and have it set for this the top here, the head. Thank you. I was like, I know there's a word. Also, we were saying last week, some people saying they preferred the top of the shoulder as their stop loss. It's going to depend on your risk appetite, but either way, I think this is kind of a random level that they have charted out here. It will have to be up to you.
Rounded top and bottom. I'll send that to you right now.
Yeah. So let's talk about the rounded.
There you go. Quick question from Kevin, rookie wannabe trader here. You don't have to call yourself that. Do these patterns apply to all charts? Do you have different preferred daily, weekly, monthly charts? So like I was saying earlier, all these patterns are fractal. Meaning what? Meaning that they work on whatever time frame you're looking at it. The only difference is the failure rate changes the narrower the time frame you go. So if I start looking at a 1-minute time frame, a 3-minute time frame, the chances of the pattern failing on the smaller time frame is higher than the chances of the pattern failing on the higher time frame, like the hourly or the 4-hour, the daily, the weekly. The higher the time frame and the more accurate the pattern is likely to be. Just want to tell you that. It doesn't mean that they're not usable on smaller time frames. You just have to account for the higher failure rate. Hope that helps.
Yeah, so now we are going to chat about, thank you for sending me the photo here. This is the rounded top, or the frowny face, or the roundy face, or smiley face, roundy face, what have you. So rounded, this is an example of rounded top, which is going to be, this is also a reversal pattern. This is going to be a bearish reversal. So we're up on the day, and then we're kind of noticing that we're consolidating a little bit at this top, and then kind of moving a bit to the downside. So it'll appear as an inverted U, and it will indicate an imminent downtrend. Like, a smiley face or a roundy face is going to be the opposite of this. So this will kind of look like a U and occurs before an uptrend. So the price action is similar to a double top or double bottom, but it just plays out a little bit over a longer period of time. And so in the rounded top, the buying sentiment is still gaining ground at the beginning, as evidenced by the higher highs hit by the market, but then a series of lower highs will kind of appear to offer a strong signal that sellers are about to take over. And then you have the opposite occurring with a rounded bottom. And then much like all the other ones, in terms of entries and exits, right, which is what we're talking about, you're going to measure, you want to enter when we see the confirmed breakout. And again, you can kind of, to make sure we do have a breakout, you can look at other time frames, you can look at other indicators, see what's shaking, and then you're going to measure from the bottom of the breakout to the top of the rounded. And then again, I like here that they have it charted so you can actually see where that top is going to be. Yeah, so you measure from the breakout to the top of the rounded top, and then you're going to basically take that distance, that's going to be your out. They use a random level as the stop once again, but if you want to do like a 1-to-1 risk-reward ratio, you can plan your stop for the top of this dome here, and then you're going to do the same. If you have a rounded bottom, you're going to measure from the resistance area to the bottom of the U form, and then you're going to use that as your breakout. There we go.
Bang, and I sent you the last one.
Yeah, thank you.
Yeah, so the cup and handle.
That here, so cup and handle. Yeah, I think probable is a more appropriate word than accurate, Neil Johnson. Yeah, I agree. Like, it's not always going to happen, but you know, like you can just kind of keep an eye out and be aware of them, right? So there you go. Let's get it cracking. Thank you for sending me this one. Cup and handle, last but not least. So it's similar to a rounded bottom, right? Because they can be a little bit more, as you can see here, they can be a little bit pointier, they can be a little bit rounder, but you generally want to have this rounded shape. And then it has a second smaller dip after it. So this is, you know, you still do have a higher low. So you're in a downtrend, you see this rounded bottom, and then you see a higher low. And then you're going to be like, you know what I mean? It will intrigue you. There also, what's interesting too, is we do have a clear support level here as well that'll eventually form the breakout. Like in this example, 1, 2, 3, 4 touches, and then we break to the upside, right? And so this is also interesting as well. This is a bullish reversal. So you're in a downtrend, and then you kind of see some recovery here. And then it has a second smaller dip after it, and the second smaller curve can actually resemble a flag pattern if the trend lines are parallel to each other, but not always. So think of a cup and handle as like a double bottom that's followed by another smaller double bottom, as I was saying, right? So another higher low, as Sharif likes to say.
Yes, ma'am.
And then they all are really respecting this support area here. And then eventually, like a double bottom, is, you know, we're going to see that breakout, and you're going to measure the breakout as exactly like the double bottom or the double top, because you can also have reverse or inverse, I guess, cups and handles. Because you measure from the bottom of the cup to the support area, that's going to be your breakout, and you might want your stop. You know, what I'm thinking too for your stop, if you don't want to do this random area, you could maybe even do like the handle as your stop.
I would 100% agree with that.
That would be good if you're a little bit more moderate with regards to risk.
I would 100% agree with that.
Thank you. Yeah. And then for the bottom here, you could use that as your, if you want a 1-to-1 risk-reward ratio, if you're a little bit riskier, you have a healthier appetite, you want to eat some like risk soup, you could get out here. But yeah, I think honestly, I don't think the handle is a bad look for an out there.
Awesome. All right. Risk scoop, you're killing it. All right, guys. Thank you, Adara, for that. Keep in mind, guys, what kind of patterns each one of these is, because just because you're seeing what you think is a pattern, it doesn't mean that it falls within the strict definition of that pattern. So why does this matter? Because a double top, for it to be a legitimate double top, it must be preceded by a move up. The price action has to be up and to the right. It has to be an uptrend because it's a reversal pattern. The uptrend is going to reverse. So you may think you see a double top, but you have to look at the price action that precedes it. Similarly, with a double bottom, there has to be price action down and to the right. It has to be descending. It has to be a bearish little price trend there because it's going to reverse, right? And then in addition to that, when you're looking at double tops and bottoms, it's absolutely normal for there to be variance between those tops and those bottoms. So on the M or on the W, for example, on the double bottom, the right side of the W can be higher than the left side, but it can't be separated on a $5 stock by $2. Okay, it's going to have to be relatively close. Relatively close, obviously, is contextual. What stock are we trading? What's the price of the stock? What's the normal average true range of the stock? All these factors you have to consider. It becomes much more complicated, much more nuanced when you're trying to do this correctly. What we're trying to give you are the basics to understand. I should be looking for A, B, and C, but you have to understand that in order to use these patterns correctly, you're going to have to do your homework. You're going to have to look at what confirmatory indicators to look for with respect to volume, with respect to all other different types of indicators that you may want to incorporate, right? But the most important thing is, just because you see it happening, it doesn't mean that it is actually that pattern. You have to look at the trend that preceded it, okay? Now, I just want to really make that point because you know, we're getting a lot of people in the chat saying, well, look, double bottom or cup and handle on this and that. Great. Maybe you think you see it, and you know, good for you for trying and good for you for trying to apply yourself. But you have to look at what preceded that trend in order to see, is this a legitimate pattern? Am I seeing what I want to see, or am I seeing what's there, right? And again, this is going to be, you know, it's a work in progress. It's a work in progress for all of us, guys, okay? And I by no means want to disparage anybody. That is not my intention, but it's a tough game. Tough game.
Yeah.
All right. BlackBerry. Sharif Adera, please look at the inverse head and shoulders on ABR. Barrick Gold, 6-month daily. Just broke out left shoulder middle August. Would you still trade it? Well, I mean, if it's an actual inverse head and shoulders, that means we're about to see a nice bullish pattern. So let's have a look. Let's have a look. Why not? BlackBerry, it's called ABR. Let's look at ABR, and he wants us to look at the daily. We're going to go look at the daily. So here's what I see on the daily. Well, look, you're not wrong. This could be, there we go. Let me just put in the ticker, ABR, so everybody can follow along. What we see here is left shoulder, right shoulder, head. It's preceded, not followed, sorry, by a downtrend, right? So we had a downtrend in play, and then we get what we perceive to be a head and shoulder break, a head and shoulder pattern. Now, this may or may not be one. Kind of hard to tell a little bit here because we got so many other peaks and troughs, obfuscating. I haven't used that one before.
Obfuscating.
Yeah, I haven't used that one before. That's why I hit it. Obfuscating the other peaks and troughs that we have. But if this is accurate, then there should be a nice break through the neckline. The neckline, I would say to you, on this particular chart would be that 15.5, almost maybe 16. The thing is, though, like, look at what you did. You'd have a really skewed neckline because you got so high up here and then you came back down. The neckline between the left shoulder and the right shoulder, although it can be skewed, it shouldn't be that skewed. So this one looks a little bit tricky, but you have some of the good characteristics there for an inverse head and shoulders. You have a head that's obviously lower than the right and the left shoulder. You have a downtrend preceding it. The neckline is the only issue here. It's not a deal breaker, but it's one that you need to be aware of, okay? And so in this particular case, what you're doing is you're going to measure from the neckline, so from here all the way down to here, and so you're going to say, okay, that's about 15 2/3 from the top, and then that is $10 from the bottom, so that's $5.33. You're going to measure $5.33 from here upward, and that's where your profit taker is going to be. Your stop loss, if this is a right shoulder, should be right below the right shoulder, but some books say put it halfway, okay? I've never looked at ABR before, first time I ever look at it, so bit of a tough analysis on that one, maybe a little bit easier to look at something else. All right, Redna 1, Sharif, huge money potential with Tesla. Please look at it, just broke. Okay, so we did talk about that flat top at 253 brewing on TSLA.
Brewing, I like that.
Yeah. Well, let's have a look here at TSLA on the 5. All right, Katina Man, what's the look on TSLA? You still holding? The Katina Man got, okay, so the Katina Man got out at 252. Yeah, when it broke VWAP, he got out of that trade. So here's what I see. This is TSLA. Let's put in the ticker. TSLA. No indicators on this one, guys. Sorry, because I had to get rid of it for the other one. What I'm looking for here is a print here on a closing basis, because look what happened earlier. We wick, we reject. We wick, we reject. Again, wick and reject, wick and reject. Now we're getting some directional movement through that 253 on TSLA, that ascending wedge that we were talking about, right? Where we had that higher low, higher low, higher low, flat top. Looks like it's going to break. I would wait for a 5-minute candle to close before I bamboozle a trade into this, because we've had multiple wicks and fails. So you don't know if this is going to fail or not. But good luck for you there, Redna. And thank you for alerting me for the break of 253 on TSLA, because we were talking about it earlier. Was that Redna? Yeah, it was. Yeah. William, is it still messing up? He's testing it. Okay. Hope my home. All right. Sharif Adera, great point. And traders that just look for a reason to buy will lose their shirts. Better to look at a chart and identify a reason not to buy. Oh, interesting perspective there. Okay. Well, thank you for that. Now Tesla has closed above 253 on the 5-minute chart on a closing basis. So this could be an interesting trade here, guys, as Tesla looks possibly to get into that 1% area. It's up 0.95. There is some pre-market action here that we need to be aware of. There was a bit of a 2 touches here at 254 and a quarter, both of which rejected. That's about $1 from where we are now. So that's some decent upside. You could get into a trade possibly with your stop just below that 253. I'm not telling you how to trade, but yeah, Tesla looks like it could be headed to the upside here, breaking through that 253 resistance on the 5. Good look for TSLA.
Yeah. It's a really good look, and I also appreciate, you know, like earlier when I was saying, you know, people were saying kind of looks like a double top, and I was like, oh, maybe it does. I appreciate that you did point out the higher lows that we had as well, right? Because that's what ended up kind of coming to fruition more when we did have that break above, because we had those higher lows. Also, a couple interesting things here in the chat. Chris Bix tagging me here. A cup and handle pattern is more a continuation pattern than a reversal. It's topping or bottoming 3 times. The more level is tested, the more likely it is to break.
So you may feel that way, and you're entitled to feel whatever you want and to trade in the way that you want. But I'm just telling you what most of the books say, okay? A cup and handle is a reversal pattern. Essentially here, I'll read it word for word. I'll read it verbatim. The cup and handle pattern is similar to a rounded bottom, except it has a second smaller dip after it. The second smaller curve can resemble a flag pattern if the trend lines are parallel to each other. You can think of a cup and handle as like a double bottom that's followed by another smaller double bottom, delaying the beginning of the uptrend but not preventing it. And like a double bottom, the cup and handle is a bullish reversal pattern. Okay, so not going to really argue about that. You're obviously, you know, trade however you like, but we're here to just tell you what the prevailing wisdom is, I guess.
Prevailing wisdom, I like that.
All right, any thoughts on SPY high for today? So I don't typically look at the SPY. I like the ES, and that comes vis-a-vis Susanna Penna. So we'll have a look at the ES. The ES today underperforming the NQ. So you have the NQ up 0.6 or 0.58, and the ES is just flat at 0.01 in the green. So we'll have a look. This is the ES March contract. Here we go, ES March contract, and clearly we're getting some resistance here, no question about it, at this 477, 478 level. Look how many times we're touching this, 1, 2, 3, and almost 4 here. The good news is, though, we're putting in some higher lows, so kind of looks like, what was that one we were just looking at? Tesla. Yeah, just like Tesla right now, where we had higher lows, and flat top. We'll have to see how this one does. Yesterday, the ES was quite strong. So was the Russell. The Russell's negative today, and the ES is flat. You know, let's not anticipate. Let's participate, guys. Right? So let's not, you know, just guess that we're going to break through this 477, 478, and let's actually wait for a break on a closing basis. Then we can participate in the trade. But the SPY or the ES today definitely underperforming the NQ for the moment. Until it does break through this obvious resistance level that we've been dealing with essentially all day. So hope that helps, Susanna. Just be patient. Let's see what we get with the SPY. Obviously, it's been very strong lately as we've been knocking on the door of that 4,800 for a while. Now, today is the rebalancing day for the S&P 500. In case you're wondering what that is, we have additions and deletions. So some stuff going into the S&P 500, some stuff coming out. The most notable one that's going in is UBER, and that's why I'm in this trade at the moment. The other one that's notable for me coming out is SEDGE, Solar Edge. That was big in the pandemic, and you know, the intervening years after that, or the proceeding years after that. But solar has kind of fallen out of favor as of late, and I guess they're taking it out possibly for that reason. Not really sure why they're taking it out, but yeah, Solar Edge probably going to be on the other side of that trade today, even though solar is strong on the day.
Yes, well, there's a lot of upgrades. I know Enphase got an upgrade.
Enphase did get a big boy upgrade, yeah. Full FSLR up 5.4, ENPH up 3.25. Solar Edge, which is the one that's being removed, SEDG, is up 0.81, not by much, but you know. Elon, Adair, Sharif, hi. Regarding the Frank Caberna is going to be on today at 2:45, guys. Hey? Okay, I didn't know that. We had a technical issue with Frank being on yesterday, so for all those that were waiting for Frank to come on with Brendo today, yesterday at 2:45, he will be on today at 2:45. Frank Caberna, Director of Strategy at IG, so make sure to hang out there. Always has very insightful commentary with respect to the market and the macroeconomic situation. Elon goes on to say, hi, regarding quad witching today, with VIX down today and major indexes up, do you see the market bullishness will sustain much longer past the new year? Happy trading. Hard to know, Elon. All I know is that we have a different interest rate climate in 2024, projected interest rate climate, than the one we had 3 days ago. Okay? So on Wednesday, the Fed reissued their dot plot. The dot plot is where each member thinks the interest rate will be at any given point in time, typically Q1, 2, 3, and 4 for 2024 and after 25, 26. They are basically putting their projections down on paper where they think interest rates will be. The consensus was that we will likely be 75 basis points lower than where we are now by the end of 24, meaning that there will have to be projecting, of course, it doesn't have to be anything. They're projecting at least 3 interest rate cuts of 25 basis points each. If you factor that and how that has an effect on the market, typically rate cuts, especially in this economic climate, will have a bullish effect on the equities as money leaves the money market and comes into the equity market. What the hell am I talking about? Well, when you have a higher rate environment, I get paid almost 5.25%, 6%, depending on who I'm going with, to put my money in whatever, a money market fund, a savings account, a high interest, a GIC, we have that in Canada. I don't know what you guys have in the States there. Essentially, to park my money in a treasury fund, a 6-month fund, a one-year treasury, a 2-year treasury, whatever it is, will typically give me X amount of a yield, which is the money that I get for holding that treasury note, the bond. So if that percentage goes down, money will trickle out of that fund or out of that market, which is called the money market, and it's going to come into the equities market. And depending on who you're listening to, some projections are about $1 trillion is going to leave that market and come into the equity market possibly next year. That's just one person's projection, so don't put too much weight into that. You should definitely do your homework on that. But if that is the case, then when money leaves one market and comes into another, it typically has a very bullish effect. And so if you look at it that way, hopefully we have a strong 2024, but nothing's etched in stone, right? Hope that helps. All right, any other questions? Because we want to get back into the lesson, but we're going to get back on the top of the hour. Still a little bit of time. Oh, there's some more questions coming in. All right. Guntbag. I like that name.
Fun, yeah.
Guntbag. Adara, Sharif, for a double top or bottom reversal pattern, does the second double for both need to be a lower high or a higher low? Okay, great question. There's no hard and fast rule, but it's absolutely normal for a double bottom, so the W shape, for the right side of the W to be higher than the left side of the W. And why is that normal? Because we know that the double bottom is a trend reversal pattern, meaning that the downtrend that preceded the double bottom is going to be reversed, meaning that we're going to get into a bullish pattern. And so it would be entirely normal for buyers to be overwhelming sellers incrementally. And so if you have a higher right side of the W than the left side of the W, entirely normal. Conversely, at the double top, we know is a bearish reversal pattern, meaning that the preceding uptrend that preceded it, sellers will incrementally overwhelm buyers, and it's totally normal for the right side of the M to be lower than the left side of the M. So completely normal there. And remember I used to make a joke, the extra bearish double bottom or extra bullish double top? And that's where I got that from, right? So hope that helps. I think I described that sufficiently? I don't know.
Yeah, no, I think it's a good question, and I appreciate you like kind of bringing that up, right? Because I think sometimes, like, and I'm going to go back to the Boeing example because it's a beautiful in the wild example. Sometimes it is a perfect W. Do you know what I mean? Like, it just is really a double bottom, and other times it will be double bottom-esque because no patterns are perfect. You know what I mean? So I think it's interesting.
Yes, thank you for that. Absolutely agree. BlackBerry. Is it a W or a cup and handle on 1 and 8? I don't know what's 1 and 8. 1 and 8? Is that a thing? Aiden? I don't know what that is. I don't have access to that market. Sorry, BlackBerry. I don't know what 1 and 8 is. If that's a typo, just tag me again. Loser 101. That's amazing. Yes, Loser 101. Awesome name. Hello. You guys mentioned VRCA earlier. Did I? Okay. Did you? Yeah, that was small cap capper. Yeah, Neil, thank you for that. What do you guys think of the stock now? And would you trade it based on the patterns mentioned? Let's have a look.
Yeah, I think also with regards to small cap entry being the topic du jour on Wednesday.
Yes, ma'am.
I think it could be an interesting discussion.
Absolutely. Let me get a chart here with some volume on it because I've removed all the volume from all my charts. This is no good, Adara. All right, we're going to have to go here.
Also, I already, just looking at it now, I think it already fulfills one of your requirements, or two of your, well, no, one. Right now it fulfills one of your requirements.
Let's have a look.
So we shall see.
Ooh.
I learned a lot from Small Cap Day, so.
Okay, what do you see here? I'm going to leave this to you.
Okay, so I see, I'm going to look at it in terms of Sharif's guide to small cap entries. So we did break our pre-market high, which was one of the guides to small cap entries. The one, though, is we're below VWAP now.
So
that is one of your guides to small cap entries that it does fail.
Yes.
We are below VWAP. So I would say it's about 50-50, a decent point of entry for you if I'm just looking at like the Sharif rules, which I learned a lot from actually. But in terms of larger scale, I see kind of a bull pennant on it. But again, small caps don't always listen to rules.
They don't.
Small caps do not care about your feelings, even more than the market. Small caps are like meaner. So we do have a nice, like kind of flag pull here of honestly, if I go like what, like $4 to about $6.60. So it's about like put $1.50 actually, $1.60. No, sorry, $2.50, $2.60 of a breakout if this does break out. But yeah, so I think that's worth noting. But again, like I think it is below VWAP, which, as you were kind of saying, is kind of an area that you would not want to enter a small cap. Also, it's kind of later in the day. It's about like 12. Yeah. It's about, well, it is 12:43, and so sometimes some of these small caps lose energy. They get their balloons, their bubbles kind of burst earlier in the day. But yeah, I think like it does have the whole it broke its pre-market high, which I know is one of the things it has going for it that you look for.
So here's what I'm gonna say. Couple of major important points to note here. So firstly, you bring up a really good point about waiting for the break of the pre-market high. But we have a bit of a bamboozling trade here because we got a wick and then we have the closing prints. And you know how I care about so I created a bit of a zone. Okay, let's call this the zone over here. So we get now this consolidation area over here fits within this zone. Now, why is this important? Fabian, if you could come, thank you. Because this possibly looks like an inverse cup and handle, where we could possibly get this rounding over here. It's preceded by a move up. We know it's a reversal pattern, so we have that move up. We have the rounding. We have this consolidation zone, which jives with what we did in the pre. And look, most notably here, we're getting rejections off VWAP. So it's south of VWAP. You know how I feel about small cap gappers and VWAP. We're getting now VWAP not acting as support like it did prior, but acting as resistance. And we're getting this consolidation zone, which is what we look for in the cup and handle. So look for possibly that breakdown, right? I don't know if this one continues. This might be an interesting short, not a hard and fast rule. Where do you look for some support possibly into that $5 area? Why? Because look at what we did over here. Right at 9:30, we gapped up. We definitely found resistance at $5, moved back down to 4, and then we broke 5 eventually. So this is going to be an interesting area. If we break down from here, we could find some support at 5, but I would say this is a bearish look right now. We're south of VWAP. We're creating what looks to be a possible cup and handle, flat bottom break coming through, and you're in this kind of no man's land over here. You're going to have to really break down below it to see the manifestation of that. But Very good question and very good look there on VRCA. Yeah, very good. I actually like that one.
Yeah, it does have the whole it breaking the pre-market high going for it, which a lot of small caps do not have, actually.
No.
Yeah.
William Randolph, Sharif, Adira, solar. I've worked in the solar industry the last 8 years, and interest rates really hurt the industry and difficult to sell in certain markets, and Powell's speech was a huge plus. I 100% agree with you. The only question is, and we don't get to politics on this show, but I'm going to have to get into it, okay? If the Republicans win the presidential elections next fall, that could hurt the solar industry because they probably will not prioritize these green energy initiatives as the Democrats do. I'm agnostic one way or another, not American, but what I'm trying to tell you is look at some of the solar charts during the Trump administration and then when Biden won. They seem to find a bullish catalyst when the Dems are in power because the Dems typically espouse these green energy initiatives. I don't know if the Republicans are going to as well. So that's the only possible headwind that I see, and I'm just going to leave it at that. Moving down, any other questions or anything here? Chef Joe, what's up, man? You probably know this, but put the plus or minus sign in front of the symbol to see the chart upside down. The cup, I didn't actually know that, dude. Are you kidding me?
Chef Joe cooking up a really good shortcut here.
I need to see that right now.
Like
and see if it works on mine. No, it doesn't work on mine.
What platform are you using, Chef Joe?
Yeah, Chef Joe, I'd love to really know what you're using because that's brilliant. You probably know this, but put the plus or minus sign in front of the symbol to see the chart upside down. Dang. Let me see if it works over here.
Also, I like that he was like, assumed we knew it. Like, that's very sweet. But yeah, no, we do not know.
It doesn't work on P-Pro 8 either. Okay. Yeah, that's okay.
We tried.
Just to see the different things. Yeah.
It's a nice tip,
Fabian's like, why do you want to see that? Just because you don't want to see it.
Yeah.
All right. Yeah, it's all good. It's all good. I'm talking to Fabian in my ear. I'm not talking to myself, guys. I'm not nuts.
Yeah, Fabian's trying to gaslight you now, though. He's like,
yeah,
oh, sure
I know,
right?
Yeah. Uber tanking again off that 63 and a quarter. I don't care. I'm just going to hold it. Matan, hey, Sharif, do you think we are in a bull market or bear market? Well, I mean, I'm not really one to make a pronouncement, but I think we're in a 20-year bull market now, something like that. Yeah, it's a 20-year secular bull market. Obviously, you have intervening years, 2022, obviously. You can have, obviously, downtrends in a bull market. That's normal. I personally think that 2024 is going to be a good year just because of interest rates. The only real variable is if the recession hits because the consumer gets tapped out. If the consumer runs out of money, it's going to be a tough one. We'll have to wait and see. Let's not guess. Let's see what actually comes to fruition. But yeah, what's up?
I have Comp XRS, sorry, this is a bit older here up in the chat, but is BABA a buy at these levels? Any intelligent points? So I have the daily up on here as well. Honestly, like I pulled this one. I mean, we don't give financial advice, but I can just like generally look at the chart here. I pulled BABA up earlier, I think a couple days ago. On the day, the daily look is like not a great time, but intraday is really strong for Alibaba. So I will pull this up. We are up like 3.5%. We got some economic news out of China basically saying that retail did see a significant increase, not as big as expected. So even though the actual news was not that positive on the whole, there is some hope for, potential stimuli, coming from Beijing. So I think that was what really potentially drove the market up here. What does make me nervous is we have not had another new high since that high we made at 10:55. So yeah, I apologize for the lateness of me viewing this, but yeah, we had a really nice upward channel earlier and then we kind of petered off a little bit. If we break a lower low, I think it could, could be interesting to look at. But yeah, I would say be very cognizant of the lack of a higher high. There you are. Also, thank you, Nick W, for the super chat. So this is addressed at Sharif, but I am here now, so I can take a look at it. Can you look at APPN? Feels like it's held this uptrend and made a reverse head and shoulders. Looking for a $50 retracement. Article link below. Let me see if there's an article link. Yeah, I'll pull up APPN. Here we are. Up, okay. This daily chart on APPN. Let me get some deets on APPN as well. Appian Corp. Okay, so yeah, so this is a really, really solid flat channel, I would say, at APPM. I'm going to pull this back further. We had almost kind of a triple top here at this 52 area with lower lows, and then we kind of fell to the downside. We were in a nice downward channel for a while here. $50 retracement, I would say, for my, you know, and again, no financial advice, just what I'm seeing on the chart. In my opinion, it would, I think for the $50 level, which I would say that the 52 seems to be pretty key here, because that was where we had that triple top. Yeah, the 50, I would say we kind of need a break to the flat channel to the upside first. To me, that would kind of be of interest before basically saying like this thing could get to 50, right? So we've been in this flat channel of like 35 to 38 for a while now. We could break up above that, but I would say, yeah, to me, I would need to wait for a break above this flat channel or out of this flat channel before saying anything about $50, just because we are a bit of a ways away on that one. So that is my look on that one here as well. What else is anyone looking at Microsoft MJP up here? I was looking at Microsoft earlier, and both times I ran away like a scared kitten. They were both longs, and then it ended up kind of working out. So like the idea was right, I just got in too early. So I was trying to take advantage of these lower lows and higher highs. The second time, honestly, I think I just realized I was like, you know, I'm not super feeling this trade. I lost like, I think like 10 cents. Again, these are sim trades as well. But yeah, I was just not feeling it, so I got out. But yeah, this first time, I basically was like, I want to get out. I held to my risk reward principle because I said if we make a lower low, I'm out. We did break below that 370. 65 area, which is why I left, and then we kind of retraced higher. So yeah, so the idea was right. I just got in a little bit early, but yeah, happy I held the risk reward principle. The second time, I will admit, I was just kind of like feeling meh on the trade, feeling a little bit down on my trading today, I suppose. But yeah, I mean, that. Thank you. Yeah, I'm just talking about Microsoft, but yeah. Thank you. I appreciate the shake it, Taylor Swift. But yeah, so I mean, this could.
That was you though.
I know. I'm just laughing. I know. I put it upon myself. Also, what's interesting, it was not a head and shoulder, but Netflix did break below that 470 support area. So you know what I will take away from this in the Microsoft trade? I had the ideas right. I just didn't have the execution right, and that's okay. And I think sometimes having the ideas right is not a bad thing, and I think that's why I'm grateful I'm in the sim, because as you were saying, it's a good opportunity to get some reps in, do some workouts with the little tiny weights before you get the giant barbells, right? So I'll take that away. Also, we got a super chat from Nick W. He addressed you. I went into it, but yeah, I just want to.
What was the question?
So it was basically about APPN and if it could retrace to the $50 level on the daily. It's been in like a flat channel for a good while. So I said I'd kind of wait and see the flat channel breakout on. So it was a daily chart.
Yeah, let's have a look. Jeez Louise.
Yeah, I said I don't know if 50 level is
okay,
possible.
so it's a big down. Okay, well, first of all, it's obviously in a downtrend now. Let's look at it a little bit deeper. With respect to the last year, I mean, we could still say, sadly, Nick Dub, that we are in a downtrend, lower high, lower high, lower high, and then we are in a pattern here of some lower lows. Now, we did make a higher low over here and a bit of a higher low. Geez, this one, it's so distorted. Let me look at the weekly here.
Oh yeah, he wants you to look at the weekly.
Oh yeah? Okay, cool. Well, there you go. I mean, we're obviously at a very critical. Okay, so Nick, this gets interesting to me if we can break above that 75.80. We have a resistance level there. We have another resistance level there that in around that area. First and foremost, I need to see higher highs. We haven't seen any higher highs so far. You had a peak over here at 87 1/3. You had a peak over here at 55 or 54 3/4. You have a peak over here at 52 and change. So it's lower high, lower high, lower high, all the while with lower lows. Now this was the kind of outlying event where we made a higher low, and this base over here is a little bit higher. So what I need to see first and foremost is a print above 55. Give me that print above this higher high, and then I start keeping my eye on this 66 area, right? And then ultimately what I want to break is this area over here, taking us back to May 2021, which is around that $80 area. I know that's a far move from where we are now, but look at this chart. I mean, we are really talking about a big move down. So, Nick Dub, I don't know anything about the fundamentals of this company, but I don't like the lower highs and the lower lows, and I need to see something above 55. I hope that helps. All right, our 5 minutes or so, then we'll start the lesson again, real close to that. Uber still doing the dance with no pants at $63. We're still holding this one a bit. Ooh, look at this, Adira.
Ooh.
Double top,
Ooh.
question mark.
And there's a really clear support level too.
Yes.
Which you can see because you took out your beak waters
there.
there.
You go. Well, I haven't taken anything out. No, come to the chart.
Oh, you added there, sorry.
Yeah, so I'm long, right? Yeah. So if this breaks that $63.80 area, that's it. We're gonna end the trade, and we're gonna wait to get back in at the end when all the market on close orders come in, because Uber is being added to the S&P 500. So all the individuals and all the hedge funds and all the different funds in general that are going to be adding or going to be following the market are going to have to add Uber into their portfolio. We're talking about almost 200 million shares that are going to be added today. We're just going to see about when they get added. So far on Uber, we've only traded 26.2 million shares. So we haven't even come close to that 200 million yet. You know, from experience, these the shares seem to get added towards the end of the day on the market on close. So we'll have to see how that works out. But so far, not so good on
I like
BER, right?
Yeah.
All right.
Uber. As Obi would say, Uber.
Yes.
Yeah.
We're going to get some more questions, and then we're going to go into the lesson again. Shiza14 on TOS. Can you also enter multiple tickers in one chart? It will then trade. Okay. Thank you. I don't use TOS. Xmas tree on Palantir. I'm not familiar with that.
Like the Christmas tree retracement? Maybe, is that what they're referring to?
Oh, maybe.
I know you said that's Randy's pattern, right?
Yes. PLTR. 5 minutes. Yes, you're right.
Ah.
The Christmas tree retracement. There we go.
We kind of had a star even at the top.
Yeah?
A little bit.
Oh, that's nice. I put a star on the top of my tree.
Really?
I was kind of proud of it, I'm not going to lie.
That's it. Was it like on fancies? Because some people use like literal stars and some people use like, you know, angels or like fancy stars. What kind of star is it, Sharif? The people want to know.
I will post a picture on the Insta.
Okay.
On the Instagram, to take a page out of Obi's book. On the Instagram.
Is that what he said?
It's a nice one. He calls everything the. He's like the Amazon, the Google, the Apple, right? That's. I call you the. Neil just accused me of using the on everything. I only call him the. Right? Because he's the Neil, right? Like he is the Neil.
He's not just Neil. He's the Neil.
He's displeased with me at the moment. He's giving me that look. Huh? He said his mother named him Neil, not the Neil, and I should respect what his mother named him. All right. He's like, you don't want her to bring the slip road, do you? Emma Hamada, I am curious on your thoughts on Zim long term. What are these weird stocks that everybody's talking about today?
Zim was a small dude moving earlier
What would
today.
you need to see to enter it? It's nuts, but today, look where it came from. Let's look at Zim. I've never even heard of this.
I was looking at it earlier, but it wasn't.
What is it? Is it a small cap gapper? All right, what is this? 1.13 billion. It's up 15.4%. All right, let's look at the daily. Guys, come to my chart. All right, Zim.
I think it's European, I want to say. I think I'm wrong.
All right, so it's a real bad looker. I mean, we don't need to argue about that. Obviously, it's coming off from like that $91 area back in March of 2022. And look, I don't like it, because it's a downtrend. It's lower highs, lower lows, uninterrupted, right? Obviously, the aggression with which we're making lower highs and lower lows slowed down a little bit, right, from the previous move. But when I zoom in, the trend still holds. The trend is still holding, sadly, right? Where you're getting lower highs and lower lows. You know, clearly there's something to be said here about this $15 area. This is a bit of a crest on the move down. It's also a trough over here. So I'd say maybe something above 15 bucks. You start getting interested. It's fine, right? I mean, you don't have to be first. That's the thing. I'd rather be late to the party and get it right than be first to the party and get it wrong, right? So if you start taking it on days like this, well, look, there's been days like this already. Like days like today, you get a nice move up off that 7.5, that 8, whatever. You get into 9 3/4. Well, there's been days like that too. Look at this over here. In February, earlier this year, you had that, what do you call this?
You call that
Rounded
a rounded bottom, a roundy face.
Yes.
Yeah.
And there you go. We got several great days only to trend back down later. So I'm going to need to see a little bit more personally to get interested in this. I'm thinking about 15, 16 bucks in this area right here. Make a new high and break through that resistance level right there. Hope that helps.
Can I ask a question about this,
Sure.
actually? So does it mean anything when, because we have a clear defined downward trend on this chart, does it mean anything that it's getting more compressed in that the range is getting smaller?
I think we're just getting lower in the prices. So like,
Okay.
whereas there was a lot of range earlier, like, I mean, look where we're coming from, Adara.
Yeah, yeah, that's
Right,
true.
that's the thing,
I just
right?
wasn't sure if that was of significance, and I figured I may as well ask because we actually have something showing that.
Yeah.
Also, thank you, Redna, for the $4.99, Redna1 for the $4.99 super
Thank
chat.
you.
Not seeing anything in it, but thank
No.
you very much for the super chat.
All right, let's start the lesson, okay? Because it's 1 o'clock and we got to get to it again. Here, we are talking about entries and exits on 5 different chart patterns. We're going to talk about double bottoms, double tops, heads and shoulders, rounded tops and bottoms, and cup and handles. What we're talking about today is not the nuances of all these patterns, but just the rudimentary way to get in and get out. And we're going to talk about measuring. We're going to talk about stop losses, profit takers, and entries. Those are the 3 things we're talking about with respect to these patterns. Stop losses, profit takers, and entries. Let's go. Double top. Here we are. So this is what you call a beautiful looking double top. What you need to understand about this pattern, it is a reversal pattern, meaning that if you see this pattern, it better be coming from a bullish price pattern. Meaning what? It should be strong before it gets weak. We're reversing the strength. This is a reversal pattern. So you should see up into the right price action for the most part before you really start tanking. So as you see here, we move up. We're moving up from lower prices to higher prices, and then we're going to create 2 tops. It doesn't have to be that the 2 tops are at the same level. In fact, it probably makes sense that this crest over here, the right side of the M, is a little bit lower than the left side of the M because what it's showing you is that sellers are overwhelming buyers incrementally. Now, how do you get in? Well, you define a very clear point here of support. Now, this is based upon where it is V in the M pattern stopped. This is your support level, okay? And you're going to get long on the eventual break of the support level on the right side of the M. That's where you're going to go. You're going to punch long right here when it breaks on a closing basis. We don't care about wicks. We want on a closing basis, all right? And then what you're going to do is you're going to measure the length of the pattern from the area of support right here to the top of the M. You're going to measure that pattern, and then you're going to project it down. So you're going to take this length over here, and then you're going to project it down over here. And the bottom area of this is going to be your profit taker. That's where you're going to have your resting profit taker. Your stop can be in one of 2 places depending upon your risk appetite. If you want a 1-to-1 risk to reward ratio, you're going to place your stop at the top of the M. If you want a 2-to-1 risk to reward ratio, you're gonna basically divide the length of the pattern by 2 and place it in the middle. Okay? Very simple. To reiterate, it is a reversal pattern. It must be preceded by a move up. The right side of the M on the double top can be lower than the left side, absolutely normal. Your entry is going to be the break of the neckline, which is defined by the middle part of the M. You're going to wait for the right side of that M part to break the neckline. You're going to get long in and around here. Once that breaks on a closing braces, you're going to measure the double top from the support area to the resistance area, and then you're going to project that downward. And you're going to set your profit taker right there. holding a piece for the dream, obviously, right?
Of course, why wouldn't you?
And then your stop loss can be in one of two places. If you want a 1-to-1 risk to reward ratio, you're going to place it on the top of the M. If you want a 2-to-1, you're going to place it, you're going to take this pattern, divide by 2, and place it in the middle. Okay? That's what we're talking about there. Same exact dang thing for the double bottom, except the double bottom must be preceded by a move down. It is a bullish reversal pattern, meaning the price action that preceded it should be bearish. So it should be down and to the right. Same thing. You're looking for two areas on these V's, essentially over here, to act as a level of support. And then you're looking for the middle part of the W to be that neckline. You're going to take long the break of the neckline, and you're going to project, you're going to measure, from support to resistance, project that upward, place your profit taker right here. Your stop loss, if you want a 1-to-1 risk to reward ratio, goes on the bottom of the W. If you want a 2-to-1, you're going to place it halfway through. Same exact thing, but you really need to make sure that you're looking at the price action that precedes this pattern. With all patterns, you have to look at the price action that precedes them. So that was the... Any questions, guys, before I continue? Sharif, Uber just cratered. Really? That's $63, bro.
That bottom is really solid, and I like too that you continue to do to add to the position at that level.
Well, it's holding.
Support
it's
level.
holding. Yeah. And see, that's why I didn't want you guys to get excited when you see something akin to a double top. What if it doesn't end up being a double top? Let the pattern develop. Let it manifest. You don't have to be first. I'd rather be right than be first. And that's something Brendo taught me with respect to news.
Yeah,
he keeps telling me that all the time. He's like, I'd way rather be right than be first. I'd way rather be accurate than be the first to report it. So
that was like one of the first things I learned here, and I think it's really helpful with charts as well. And
I think so
just
as
need
well.
to step back.
And Gregory, the former, you never met him, but he was the floor manager before Brent.
I've heard about him.
Yeah, he would always say to us, participate, don't anticipate. Okay?
Yeah.
I think I like that.
I like it too.
Chelsea, Ashley, I think Sharif quit breathing for a moment.
With the
no,
Uber?
I'm good.
It's like, where's my Uber?
No, yeah, I did. I'm like, where's it taking?
Did it take off without me? Did it?
Because I have a stop, right? Like,
Yeah.
it didn't trigger, so I was confused.
Well, because you're still like the position board too, right?
Yeah. I'm just holding it.
funny.
I'm waiting for the close. That's really what I'm waiting.
Yeah.
I'm not looking to print on it right now.
And
The
it's
whole
not
thing.
a bad look right now either. Like, it makes sense to wait.
Right. All right, moving on. Any questions about double tops or bottoms? I don't think I see anything here. Oh, Fu Magoo, I like that. Sharif, do you apply Wyckoff method when looking at patterns? Fantastic question about accumulation and distribution. We briefly mentioned Wyckoff. We will have an entire week on Wyckoff. For now, I don't want to confuse people, so let's just stick to the entries and exits component for Wyckoff. But thank you for reminding me about that. It is an excellent topic to discuss. I think it's very important. Thank you for that. We will get to it in another week. All right, let's go on to the head and shoulders pattern, baby. Here we go. Where is that bad boy? There it is. Now, this applies to both heads and shoulders, a normal head and shoulders pattern and an inverse head and shoulders pattern. Let's go to the chart. So, a head and shoulders pattern is a reversal pattern, like the double top and like the double bottom. The regular head and shoulders, like the one you see here, must be preceded by bullish price action. So the price over here, that price action that's around this side, should be up and to the right for the most part, all right? And then what you're looking for here is three distinct peaks. The one in the middle, the peak in the middle, must be distinctly higher than the one on the left and the one on the right. And then what you're looking for here is a break of the neckline. So the troughs on the left shoulder and the trough on the right shoulder should be similar. They don't have to be at the same level. Much in the same way that the double top and the double bottom, the right side of those patterns can be a little bit higher or a little bit lower than the left side of those patterns. Normal, buyers overwhelming sellers, sellers overwhelming buyers. In this case, because it's a bearish reversal pattern, the sellers are overwhelming buyers. So it makes sense if the right peak is a little bit lower and the right trough is also a little bit lower. Normal, okay? So sometimes you're gonna have a slanted neckline. It's not gonna be completely horizontal. The point is to take the break of that slanted neckline when there is a decided break through that level. Take it short there, and then your profit taker is gonna be based upon the measurement from the peak of the head to the neckline. You're gonna take this measurement, you're gonna measure it in price or points. If you're trading futures, you're gonna measure it down from the break of support, and then that's where your profit taker is gonna lie. But like, as always, we're gonna hold a piece for the dang dream, right? Now, your stop loss can be in one of two places. You can either put it, or three places, okay? It really depends on your risk appetite. You can put it above the right shoulder, you can put it above the head for a 1-to-1 risk-reward ratio, or you can divide this area by 2 and wherever that ends up being, okay? So you take this entire area over here, you measure it. So let's say this is a $5 range. Your stop will be $2.50 either below this area or above this area. Hope that helps. And it's very simple. We're talking about the very rudimentary way to trade these. You should also be looking at other things like I mentioned at the top. You should be looking at volume. You should be looking for above average volumes on the break of resistance or support, whatever pattern we're trading. You should be looking for other things as well. We talked about using RSI. We talked about using MACD, incorporating these into your trading as well, okay?
Yeah, I have a question.
Yeah.
So I guess related to exit, so I'll ask it. So with regards to the piece for the dream, do you just like, how long do you hold on to the piece for? Like, I guess, do you keep hold of it until you get to like, you know, a stop loss level? Or like, how long does the dream last?
That's a fantastic question. I think that's a great question.
Thank you.
What I'd be looking for is a distinct change in the pattern. So if we made a higher high, like so for example, if I took this short, right? Ram. Oh, that's not Ram. It's Chilean Nightmare. If I took this short through here, right? And then we held it down, right? We got a downtrend now. If a new high comes in, I'll be like, well, that's it. That's not good enough for me. I'm gonzino.
That makes
right?
sense.
The patterns change. So I would look for a particular reason to go there.
Yeah.
Yeah, sure, Katina Man. Let me look at that for a sec. Katina Man just tagged me. He wants me to talk about Roblox. Give me 1 second here. All right.
Ooh.
Sean just posted this to his Twitter or X. Yeah, I know. So this is the RBLX trade by the Katina Man. And this is talking, the reason we're looking at this is because the Katina Man wants you to show you that your bias can change at any one moment. You should be ready to go at any one time. So he took this bad boy along, print, and these are all out. Yeah, print means out. Yeah. Right. And then the trend changed. Short, cover.
I like that you're saying all of them.
Right? No, but legitimately, like it's about living in the moment. It's about seeing what seeing what's actually happening in the price rather than, anticipating this is going to happen. The Katina Man took this bad boy long at 43.60 or so, covered at that 44 1/3. Covered as well over here, then took it short 44, 44.15, 44 1/4, and then covered all the way down to 43.5 there. So shout out to Sean, great trade on RBLX.
Yeah, sorry, I just wanted to say too, what I like is that there is like there's planned dollar cost averaging here, right? So it kind of goes up into VWAP and then it kind of falls down from VWAP. Oh, really?
By the way, he wanted to let you know that all these shorts that he took, all these green little... Yeah, that's what I mean. So the shorts that he entered over here, all the green fills, he had resting profit takers ready to wet his beak while he was on his walk. So, I have emphasized this so many times.
I love the sticky note.
And this is the one he took when he came back right there. This one over here. So profit takers, put the profit takers out there, baby, because you don't know when the price is going to actually get to that level. And, sometimes you're like, he trades like 8 stocks at one time, right?
Oh, yeah.
Or he goes
this morning was wild.
Yeah. So shout out to Sean for that trade. Great trade, Sean.
And I just like, too, the example of dollar cost averaging in a way that makes sense, where you kind of parcel your way into it and then just let it, fly to the downside.
Yeah. Guillermo is like, yo, bro, it's called Twitter. I'm like, sorry, bro. I'm just calling it what the owner calls it.
He's trying to respect Elon.
Yeah, I know. Shout out to Guillermo. He even says, oh, the URL says Twitter too. Does it, right? Does it really? It does.
Actually.
How silly is that? Yeah, it literally says Twitter right there. Yeah, it's jokes. All right. Sorry about that, Guillermo. I'm sorry to have displeased you by calling it Twitter. No, I'm kidding, of course. All right, last one, guys. Oh, not last one. We're talking about rounded tops and rounded bottoms now. Let's talk about these two. They're the same thing, essentially. Here we go. These are also reversal patterns. So the rounded top is a bearish reversal pattern. The price action that precedes this rounded top must be bullish. It must be, in general, up and to the right, okay? And then what you start seeing here is the trademark higher highs followed by stagnation at the top, followed by lower highs. And then you basically have to kind of gauge where the neckline here. There's no defined neckline like there is on the heads and shoulders, on the double tops and bottoms. This one you're gonna have to gauge. There is some subjectivity to it. And what you're doing is you're going to measure, like you do with all the other patterns, from the neckline or the breakdown line to the top of the arch over here, and you're gonna project that downward. You're gonna put your profit taker, pardon me, at the bottom end of that downward projection. Your stop loss can be placed at two places. Firstly, it can go at the very top if you want one-to-one risk to reward, or you can put it halfway through by dividing this price range by 2 and placing it in the middle. It is a bit of a subjective area to have your stop because it is not based on price action. It is based on some, just mathematical calculation that says, well, we're going to stop here. So that's how to trade this one. To reiterate, it is a bearish reversal pattern. It must be preceded by upward price action. The neckline is a little subjective, more subjective than the double tops and bottoms and heads and shoulders. To gauge your profit, you're going to take down you're going to get short at the break of the neckline. You're going to base your profit taker on the height of the pattern and project that downward. Your stop loss can be placed in one of two places, either at the very top for one-to-one risk to reward or 2-to-1 by placing it halfway. Okay?
I have another question about this one as well.
Go for it.
And I like what you said about the breakout being more arbitrary. So what if, for example, I'm just going to pull it up on mine so I can actually kind of show. Thank you for sending me these so I can pull it. Oop. Here we are. So what if, I'm looking at this and I kind of noticed, what if you actually set it here instead, right? So then if you set it in a different place, I guess, does that change how you measure your breakout?
Yes.
Okay, so then you'd be taking a different profit.
100%.
Okay.
Yeah, it is.
Thank you.
It's more subjective than the other two. The other one, despite the fact that they could be a little subjective because sometimes the right side of the M or the right side of the W may be different than the left side, which is fine. At least you have two discernible points. Here, you don't really know where the U started, right? The upside down U or the arch or whatever you're calling it, right? So there is some subjectivity to it. Again, we always go back to say this. It is an art, not a science. Now, with respect to the rounded bottom, it's this pattern exactly, but flipped upside down. So what would precede the bottom is a downtrend. It would be a bullish reversal pattern, where you would need a downtrend preceding the pattern, and then obviously you would have the neckline to the high side, not the low side, and you'd be taking a long, not a short, but the measuring and the stop losses are based on the same fundamentals. So that's that one. And last but certainly not least, everybody's favorite, the one that everybody seems to see everywhere, the cup and handle breakout, baby. Here it is. This one also, this is a bullish reversal pattern, okay, based on where it is. So the price trend that precedes it must be down and to the right, and then you basically form this area over here where you get a bit of a, a round shape. The characteristic is lower low, lower low, lower low, and lower highs, and then you get higher lows, lower highs, higher lows, and higher.
I do this all the time.
Higher highs and higher lows. Excuse me. The only difference between this one and the rounded bottom and top is that you get this other descent, little drop over here where it creates another little trough. Now, The key thing is this trough, though, doesn't break the bottom trough, so it's a higher low. So it's still presenting you with that bullishness because it's creating a higher low. So what you do is you try to measure this neckline, and again, it's quite subjective because you don't really know where to measure. That's the neckline break. You're taking the long there, measuring from resistance to support, projecting that upward, putting your profit taker there. Your stop loss can go in one of two places, can go at the bottom of the cup, or you can take this entire area over here, divide by 2, and place your stop loss there, which in my opinion is a little arbitrary, right? Hope that helps. Those are the entries and exits for those 5 patterns. If you have any questions with respect to any of them, just throw that in there in the chat. We'd be more than happy to answer your question. Thank you, FSC. Love the education. Thanks. No, thank you for joining us, my friend. Yeah. Yeah, so that's it there. Any other? No problem, Marjune. Very good explanation. Again, no problem. Thank you for joining us today and joining us all week, because we've been talking about entries and exits on a whole host of different scenarios. On Monday, we talked about different chart patterns. Tuesday, we talked about trading economic events. Wednesday, we talked about small cap gappers. Yesterday, we talked about getting in and out using moving averages and different indicators. And today, we're talking about some other patterns that we didn't talk about on Monday. So every day has been a different day about how to enter and exit using different strategies.
Yeah, and I think it's cool too, because even this morning, like Michael Noss, when he was on, was talking about how he used MA and then I think a couple bull pennants as well to get in and out of trades. So I think it's really cool to see that these are things that are actually being used in the wild, right? And he also, I believe, swing trades as well. So it's not just day trading.
Swing trades.
Yeah, he only swing trades, right? So I think that's very interesting. I mean, there are other things you can use basically. Also, what I saw something.
Someone was saying double bottom in NVIDIA. So I pulled up NVIDIA, Dara. Look at this.
Oh, yeah.
So preceded. Now, again, all these patterns are fractal, meaning that you can use these patterns on all time frames. However, the smaller the time frame, the more likely the failure. The higher the time frame, I'm talking about the daily, the weekly, the 4-hour, the less likely it is to fail, statistically, okay? Doesn't mean you can't use it on the smaller time frame. On this one, I've got the NVIDIA. Oh my God, I took a page out of Obi. Jeez Louise.
The Amazon.
On NVIDIA, where we're looking here at a nice downtrend coming into support at, lo and behold, VWAP. You know the white line on my chart's always going to be VWAP if the background is black. And there we go, getting some support. So nice confluence between the double bottom and VWAP. That's what I was talking about when I'm looking for other factors. And here we go, now breaking through the neckline on NVDA. Let's see if we get that move through the top end of the Bollinger Band there on a closing basis. Looking at knocking the door 492. Good look for NVDA, now up 1 2/3% on the day, Adara, but definitely off the highs at 494. Knocking on the door of 492, 491.5 right now. Nice breakthrough. Now, when I talk about breaking through the neckline, guys, always on a closing basis. Always, okay? Forget about the wicks. Always on a closing basis. Anything anybody else is looking at the moment? Let's see what people are saying here. Darwin says, NVIDIA 5 minutes. What do you see as double bottom? Is also bullish anti-shark harmonic that hit target 2? I don't even know what that is. I gotta tell you. I don't even know if you're making it up or like literally up to
He made
Google
a new
that.
pattern.
No, shout out to Darwin. Darwin's an OG in the chat.
I know, I'm joking.
Yeah. I don't even know what that is, Darwin, so I'm not even going to try to opine on it and sound like an idiot. But yeah, you want to have a look at Tesla for Armour?
I love looking at Tesla. Also, shout out to Francis Delacruz in the chat. You guys are awesome for sharing your knowledge.
Bang.
I'm still learning, but thank you. It is nice to see you feed off each other. Yeah. We have a good time. Thank you so much for the comment. And yeah, I feel like I'm learning a little bit every day, hopefully.
Yes, ma'am.
So yes, sorry, who was this to? Who was looking at Tesla?
His name was Armour. Tesla, question mark, question mark, question mark.
Tesla, exclamation point, exclamation point, exclamation point. No, I'm joking. I am on Tesla. Pull it up for you here. Yeah, this is a nice, I'm gonna draw this out because, trying to get better at drawing patterns here. Look at this. We've got our little trend line here. We did break out of that sort of ascending wedge-ish area, but we still definitely have a nice channel to the upside here. Higher low, higher low, higher low. If we break this 253.70, we would have another higher high. All I see is bullishness here on this 5-minute chart on Tesla. I got to be real with you. But, you know, we did the kind of intraday high, although it was more pre-market kind of in the wicks here, was this 254.25, as Sharif was mentioning earlier. That would be an area of resistance with which to pay close attention, I would say. Let's look at the daily, because I've gotten into this lately from people in the chat and also, you know, Sharif and everyone. These daily, like these levels on the daily chart are super vital for looking at longer term resistance and support. So let's look at 254. Let me just get my life together. Okay, here we are. 254, kind of around here. It's still around that key area where we had that giant swoop to the downside after the infamous Elon Musk earnings call in Q3, where things were said. No, I'm joking, it wasn't that dramatic. But yeah, 255 was like kind of a, you know, I mean, we've gotten there since obviously we've had those wicks, but 255 was kind of near where we closed, honestly, slightly above where we closed on that fateful day where we got the earnings after market. So yeah, I think this 254 level is kind of key. I would keep an eye on it there, especially with it being the open. And then in terms of support, I want to look too, because I know you've talked a lot to me, and I think I've learned the importance of, or I'm trying to learn the importance of previous day close. So that 251.05, kind of around, not exactly, but kind of around where we were consolidating earlier, right? So you can have previous day close be an area of support. I would not like perfect, but yeah, this 251.05 was kind of where we were chopping and turning around earlier. So yeah, keep an eye on that 254.25 with regards to Tesla Colgate, and then also just that it was the kind of the high we've had today.
Right.
Yeah.
Good look. Good look.
Very good look.
I absolutely missed a trade today on the future. I didn't. It's tough to do all this at the same time, but that 16.8 was an absolute banger at 16.8 there, coming in on the NQ March contract. You get a couple of wicks right into 16.8, it holds, and yeah, you're 30 points now in the money and above VWAP. Look for possible resistance at 16.850. We had a bit of a base around 16.850 with all the closing prints for the majority of the morning coming above 16.850, and then you've got the eventual breakdown here at 12:30. But you know, we talk about support becoming resistance and resistance becoming support, so I have to see how we do if we're able to get and clear VWAP. But yeah, that was a trade that I missed there. I should have been more alive to that 100-point level. All good. M. Allen says AMD is ripping off faces. 139.65. Yeah, nice bull trend right now, at least breaking through VWAP and getting off that low. Still below the high day, though, on AMD.
Yeah.
Let me show you them AMD.
I'm kind of noticing a really strong area of kind of resistance here as well. This 139.60 area. Because look, we kind of hit it once, twice, thrice. We did get above it earlier. We're sort of in an uptrend, but I think it is interesting to note that that's where that initial double top kind of fluked from.
Yeah, I'm not going to disagree with you, but I'm going to say that 140 area is where I'm looking.
That's true. That makes more sense. Yeah, I just think it's interesting how we kind of saw this area.
Yeah, we're getting there, and look what we did at 140. The pre-reject. You get that opening range break, which is fine because you have an insane amount of orders coming in on the market on open, right? So you get that 141 touch, and then look at that. Look where the closing prints are.
That's crazy, yeah.
They're all south of 140, and then you get back into 140 over here, you have another rejection. Now we're looking at testing 140 one more time. Right? So let's see what we can get on this one. But yeah, 140 definitely an interesting level for me.
Yeah, no, you're right.
Amped.
Yeah, amped.
Yeah. Kyle Burdett, big Kyle Burdett. Where are you looking, my man? He says inverse cup and handle. Where? Oh, there's his message before. I see a cup and handle forming on the NQ 5-minute, looking to short this handle. First of all, Kyle, I got to tell you, I seldom do I use chart patterns on the future. I like levels and I like closing prints on the future, but let's have a look for big Kyle Burdett. He says he sees it on the NQ 5-minute, cup and handle, inverse. I see what you're seeing. Yeah, so you got the round on the top, and then you're getting that kind of move back in. Let's see. Let's see. What I'll be looking for here, Kyle, I think the most important thing for me, I see what you're seeing on that, but I definitely want to see how we trade around that 16.850 just because we kept getting a support at 16.850. Look at this. Bought up, and this one wicks down, but look where the closing print is. Again, this one, wicks down, but look where the closing print is. So we'll have to wait and see. We've just cleared VWAP right now, which hasn't really factored into the NQ today, to be honest. This is the trade that I missed over here, though, that 16.8. All good. All good. All good there. Any other questions? I like levels too, just doing with your class stock. Yeah, I know. I got to tell you, like I mentioned it before, with respect to futures, I really don't use chart patterns. I got to tell you the truth, except maybe for like higher lows and flat tops, like ascending wedges and stuff like that. But with respect to other patterns, seldom do I use it. I just like my chart. I just like my levels. That's just how I do. Anything else? NVIDIA's continuing to pump here, Dara. Great look on NVDA. Let's flip that one. Yeah, we were just talking about that one breaking through the neckline there with the little double bottom that also happened to be at VWAP. So talk about confluence.
Confluence.
Yeah.
Shout out to OB.
Yes, which is this area over here. You had, it was preceded by a downtrend. We talked about the double bottom being a bullish reversal pattern. And it's great when the double bottom finds itself right at another important indicator being VWAP. Now we're knocking the door of that 493. We broke through 492. We were talking about this at 49.50. So now we're already $2 removed off that level as we pump into that 494 possible high of day. Great look for NVDA, Adara.
Yeah, no, that's a gorgeous look. I think definitely, yeah, this is crazy. I'm really sad I missed this, but it is what it is. We're not going to cry over spilt milk here. Just really happy to learn. Also, I think it goes back to what we were talking about earlier with regards to not all indicators are going to be significant, but if, like, you know, if an indicator is telling you something, listen to it, right?
Yeah.
So here we had a really significant, very clear 189 bottom twice on VWAP. So I think that might have bolstered this. Do you know what I mean? I think it is something of note here. I just wanted to shout that out. Also, Jordan Rutenberg telling you that you look mad vascular today.
Oh, thank you,
so,
Jordan.
There you go.
Yeah, I've been trying to bulk, but yeah, whatever comes.
Yeah. Also, lethargic, love that name in the chat, tagging both of us. What entries and exits do you guys feel most comfortable playing off of in your own trading strategies? Good question. I am still like very new, so I'm still kind of learning. I was saying my most comfortable strategy, period, and I was talking about this yesterday, is something I'm calling scalpulation, which is trying to get into trades at levels I find interesting. Let me see if I can pull up my NVIDIA scalps from yesterday, because I was very happy with those. Okay, I can just kind of, I know where I got in, so I can just kind of show. So yeah, basically, this was happening around like this area. Yeah, so basically yesterday I got in initially, there's a definition of scalping. So I'm calling it scalpulation because it's calculated scalps that I'm taking off certain levels and just kind of keeping an eye. So I got in right at this mid-wick here, this 475 area for my first one. Got out at 476. Obviously could have gotten more from the move, but I don't like, you know, biting off more than I can chew. I'm a bit of a nervous Nelly when I trade. Yeah, where was that? Let me find out. Yeah, okay, definitely got it. So it was this 475 to 476 area. It was these candles. And then I got in again at 476 when we saw a bit of a pullback there. Got out at 476.50. Then I was going to get back in again, but I noticed we had these continued failed wicks to the upside. Then we ended up swooping down for a little bit lower there. But yeah, just an example of my strategy. I like to see where we have a couple candles of confirmation before I get in, and I do not like to overstay my welcome. That's where I find I have the most questionable trades, is when I stay in for too long. Although I am, you know, still learning, I'm still in the sim, so we'll see a change in strategy. But, you know, through my experimentation thus far, definitely the scalpulating has been going the best so far. So we're going to try to do more of that going forward. Thank you for the question. Great question.
Absolutely.
What about you? I know you like your levels on the fute, and then you have your small cap rules.
Yeah. You know, everything is just, it's so subjective, it's kind of hard to tell, but basically the entries and exits that we talked about today on the chart patterns, keep those in mind when you think about entries and exits. Otherwise, really base it on support and resistance. If you can factor in some indicators like VWAP and the like, even better, but as long as there's confluence between that and the price action, and look for confirmation using volume as well. Why Brothers United? Sharif, how can I effectively identify and differentiate between a genuine double top or genuine double bottom pattern and a false signal when analyzing price charts? Well, there's no hard and fast rule how to do it, but one thing you can wait for is wait for the actual break up or break down below the key levels. So what do I mean by that? Let's have a look. So let's bring in, for example, the double top over here. Let me just, yeah, this is it. So what do I mean by that? First and foremost, look for what's required in respect of preceding price action. So for a double top, we need a move up because it's going to reverse. That's what the double top is. It's a reversal pattern, bearish reversal pattern. So number one you're looking for is what was the price action that preceded it. That's number one. Number two, what you're looking for is a defined neckline over here vis-a-vis the kind of the M shape, the bottom of the M on the double top. So you want to basically wait for that to happen, then you put a trend line right there, or horizontal trend line right there. And then you're going to wait for that trend line to break on this side over here, on the right side of the M. You want it to break on a closing basis. And that's where you're going to get your entry. So you're going to wait for the entire pattern to develop before you get in. All right? Don't get in up here or get in here or anywhere like that. You're going to have to wait for the actual pattern to fully develop. Participate, don't anticipate. You get long there, all right? And then you got to protect yourself because it could absolutely turn on you, right? It could look like a double top and then all of a sudden you find it bouncing back up. And that's why you put your stop loss. If you're more risk inclined, if you're in a very bearish market and there is a good chance, you know, that we really reverse hard, give yourself a 1-to-1. If we are in a bullish market and you're taking a short, give yourself, you know, that tighter stop. So that's what I would say to you. Participate, don't anticipate, allow the price action to fully develop before you really get in. And there's really no one way that you can prevent these false signals from happening, but you can try to alleviate them. The market rejecting off these levels and the NQ coming back down, by the way. Autistic machine. Okay. Is there any structure you see often on moving averages only, support and resistance? You can use support and resistance as, you can use moving averages as support and resistance, and that's what we talked about yesterday, using them to help enter and exit a position. If you want to watch that episode, just go back into our YouTube page, click the live tab at the top, and then you can see yesterday's class, and we talk all about it. We talked about it 3 times, once every hour, so you can go and check that out. I hope that helps, Autistic Machine. Dr. J, sorry, Palantir, triple bottom. Let's have a look. Let's have a look.
Also, when you are placed in the middle of the chart, the Pepsi blue matches the what you've got going on with the tape, and I just think I just saw that and was like, it's a cool.
I like it.
Side note there.
So triple bottom, you were saying on who was that? Dr. J, Palantir triple bottom.
On what?
Where do you see, bro? Oh, this is the 5 minute, 1 minute. I see. He's looking at stuff like this. Yeah, I see. We already broke down, so I think he was thinking maybe possible triple bottom at here, but it broke down. Yeah, so this is the whole thing of participate, don't anticipate. So this is clearly a downward channel where we're making lower highs and lower lows, not a double bottom, a triple bottom. So yeah, that's fine. Here to answer questions. Huang family, that's fantastic.
Oh my gosh, Sharif, look at us.
What?
Oh, wait, no, we had like our little heads in the, I enjoyed it.
Do it again. Do it.
I love this so much.
They're so funny back there. I love it. They're killing it.
It's amazing. It's so cool.
We're breaking down nicely here.
Remember when our cameras were moving the other day too? Like,
yes.
There's so many different effects always. I love it so much.
Yes, I love that. Let me add to my Uber. Yeah, I'll add incrementally. I get aggressive. All right.
Oh, Uber.
All right, Hog Rider, NVIDIA coming back to retest the neckline. Yeah, that's a good look for NVIDIA there as the market rejected that level. And so NVIDIA being part of the Mag 7 also retraced.
It's holding it really well.
Yeah, this is the neckline that we were talking about. If you were to look at the double, kind of trying to make it a double bottom there. Look for possible support, possibly at 491. We're a smidge above that now, 491.75. Let's see if we get continuity, but not everything we're going to see is going to be a double bottom or a double top. This could just be a downward channel and support off VWAP, essentially. There, we're just trying to find patterns in the wild. Look at this. This is a nice double bottom, followed by a big move down, and then a big move up, but you get resistance there. So lots of double bottom looking shapes on NVIDIA, whether today or yesterday.
Yeah.
Yes, ma'am.
I pulled up Shopify for Chris J in the chat. I have to say, this is quite the I'm not going to say triple top because it's more of just an area of consolidation, but look at this consolidation, this strong resistance we have at 77, 75-ish. Like this thing does not want to move above this area.
What is that, shop?
Yeah, look at this.
Flat top,
And
there you go,
yeah,
resistance.
and then also like we have kind of the 77 area, we keep trying to move off of that, and then you know, mostly not succeeding. So we'll have to see this 76.45 area could definitely be an area of support. But yeah, I think it's a really cool intraday look on Shopify. Chris, appreciate you bringing it up. Go Canada. Let me pull up the daily on this as well because that was the intraday. Okay, daily on Shopify, I have to say, is a really nice look. Let me zoom out a little. Oh, did the opposite of what I wanted to do there. Okay, I am struggling. There we go. So we had a really nice longer term double bottom at this 46 area. Then we really swooped above that here, kind of in this upward channel still. Yeah, really interesting look. Let me zoom how much farther we can get back here. Yeah, I think it's a good look both on the daily and the intraday. No complaints there. Chris, thank you for bringing this one up because yeah, very good chart to look at. And I think 77, that range definitely on the intraday is worth looking at.
Yeah, the future just absolutely tanked through 16.8 there. Jeez Louise. 16.8 giving up the ghost. Let's see if we get it on a closing basis. Very weak move. Wow, what's going on? Do we have an auction or something? No, it's 141. I have no idea why we're tanking right now. Anybody talking? Do we have any Fed speakers? Big move down on the future there. It just went in 1 5-minute candle from 16.815 into 16.775. Huge move down. Didn't anticipate that on the future, but there you go. Lower lows, lower highs. The trend continues. We're still definitely above the closing price yesterday, which was 16.753. We're well above that now. Let's see if we got bought up, but big move down in the future, taking out some positions there. Yeah, not much else to say. Wow, today's really taking its time to go by. Very little patience today. It's really Friday for me.
Friday.
Yeah, well.
Or Friday.
Yeah. All right. Big move down. Let's see what we get on some of these Mag 7 names. Any other questions in the chat? Let me know what we're doing. In case you're wondering today, we have the S&P rebalancing. We're getting the addition of Uber and the removal of some other names, Solar Edge, the one that comes to mind. And yeah, this is a proprietary trade that we have on the floor, deletions and additions. And this is one of those ones where I think we're going to be looking at it. Uber still up on the day, 1/3% tanking now. I'm about 30 pennies out of the money. We'll see what we get on this one, whether it continues to tank, because now the market coming down hard. Docu spike, says Darwin. Let's have a look at Docu. Oh boy.
It got a downgrade today. It was on the upgrades and downgrades.
Yeah, nice spike up by DocuSign right now. Big move
God.
up there. No idea what the hell's going on with Docu. Let's look at the blotter, see if anything's being talked about. No, I'm not getting anything on.
Too.
All right, here it is. DocuSign has no. Here it is. Yeah, I know, I see it. Here it is. E-signature company DocuSign exploring a deal. So is working with advisors to explore a sale in what could be one of the largest leveraged buyouts in recent memory. Conversations are in the early stages. People familiar with the situation said, and there are no guarantees a deal will be reached. DocuSign could attract interest from private equity firms and technology companies. A deal could be sizable given the San Francisco company's market cap is over $11 billion.
Oh.
Yeah, so nice move there for DocuSign. Below and through that comes to us vis-a-vis the Wall Street Journal. We'll see whether or not we get continuity. No details about the buyout price, but just based on the market cap of 11 billion, well, it's over 11 billion. It's 12.2 billion now with that rocket up there. Let's add in Docu over here so I can see it more clearly. There we go. Up almost 7% now, rocketing to the high side, 3.71 million shares. But a lot of the shareage coming in the last 5 minutes there as it got off that $55 area, just rocketed up $5. Here goes through 650. Here comes 61. DocuSign flying 8.3% now. Here comes 61 high a day. DocuSign really going as it gets squeezed. I don't know what the short percentage is on DocuSign. Do you guys have trade ideas up? Because I don't have trade ideas up. Neil, 2.5%, so quite negligible at this moment, but 61.50, DocuSign moving plenty on the day. Be careful because there could be some mean reversion here, but great move up on DocuSign on buyout rumors, Adair.
Yeah, I have a question. I think I found a reverse cup and a handle in the wild, but I can't tell. This Microsoft, a little bit. So we had the you know, the reverse roundy face, the frowny face over here, and then we had a bit, and you know, it's a reversal pattern. We were up on the day, and then we had this little handle here, and then we did fall to the downside. So, you know, I mean, it's always, like, it's hard, you know, you don't want to just say there are patterns that aren't there.
Yeah.
But this, to me, kind of looks like it could be kind of reverse cup and handle-ish.
Absolutely,
Yeah,
that's on softy, yeah. Well, it would make sense based on what the market is doing right now, coming back down into 16,775. So yeah, that's manifesting quite nicely. Yeah, we'll have to wait and see what we get on softy. Good look today, though.
Yeah.
Up 1%, but yeah, you saw Sean take several shorts on that and printed on that off that 371 area, came down into about 368, but it's been trending a little bit higher now, making a newer high.
Sean making it rain.
Yeah, 372.16. The Katina man was printing on that Microsoft short there. Was that you that clicked it? That was Fabian. That was a Chilean nightmare, baby. Yeah, softy, very strong on the day. We'll have to wait and see what we get at the end. Anything other that you guys want to talk about? There, Nicola VWAP says no. Let's have a look at Nicola. Why not? I don't actually have VWAP on this chart, so let me bring in the side charts here. We'll look at NKLA. What's it doing on the day, baby? Yes, it's doing that dance with VWAP on the day. But look, you know what I see here, a bit of a compression pattern, but it is a downward move. So, yeah, this isn't anything that I'm going to be interested in, sadly. The range there is just, it's really tight. And,
hard.
Yeah, break above that maybe 93-cent area, and then we'll get more interested in possible move back into 97, 98. But nothing for me there on Nicola. What about the Russell, says Showbiz? Let's look at RTY. RTY has been very strong. That's the Russell Futures contract. It had a monster day yesterday. There we go. Let's look at the Future March contract. There it is. So the Russell giving up the ghost today. It had a monster day the last couple of days. Let's go to the 15 here so we can kind of see the whole thing. Yeah, there you go. This was CPI, not CPI. That was Papa Powell Day. This is when Papa got on the mic. That 1 o'clock started rocketing up, getting off that 1890 area, breaking through that key 1900 resistance, and then taking 2000 yesterday. It had 2 up days in a row. So, you know, we did make a newer high today, 2045, but giving up the ghost like we are on basically all the indexes at the moment. Down and to the right, do we find some support? I would say support to me comes at this top end of the range over here around 1990, 1985, in and around that area. If we make it down into this area over here today, I'd be looking for some support. But let's wait to see if it makes its way down there. Russell now down 1.25% on the day, while the NASDAQ's up 0.25%. The ES down 0.25%. So definitely no confluence between these markets today. Each one marching to the beat of their own drum, Madeira.
Yeah, I just have Meta pulled up here because Meta is looking kind of downward channelish. I might get a scalpulation out of this if I see a point of entry. Yeah, I was seeing some people in the chat. I did make some trades earlier today. It just was not my day. It was not, you know, I didn't want to force anything because I was like, this early, I thought we were kind of in this bull flag because we were up on the day. We were consolidating. It didn't work out. We fell below the earlier kind of, we made a new low basically and it got out. So I just kind of wanted to kind of bring this up. But yeah, I do not dislike this clear downward trend we're seeing. If I see an opportunity for a scalpulated short, I will get it in. I'm going to make it catch on. Maybe it won't, but I will try.
Yeah,
but yeah,
keep doing your thing.
Yeah, thank you. Do your thing, 21. But yeah, I think in general, the goal right now for me, like I said, is just trying, you know, you want to find out what works for you. And I find these shorter term trades work for me. Like Meta, I could have gotten out at this 337.50. Why didn't I, right? So I think like realizing that I am more comfortable in these shorter trades and actually, you know, letting that manifest and come to fruition, I think will be helpful for me in my journey as I, you know, especially as I feel so grateful that I have this opportunity to kind of learn and grow.
We have about 10 minutes left. Why don't you talk to some people, why don't you talk to the people about your trading journey so far?
Oh, okay. Yeah.
What have you learned? What really sticks out in your mind? Yeah, just you know, add some color to that.
Cool. I wasn't prepared for this. I'm excited. Okay, so basically, I kind of I was not planning on trading. That was not something I realized was going to be in my life.
Right.
And then I kind of began doing it. I initially was just kind of like, what's moving on the day. So at that time, there was a little bit of forward when I first started. I basically, Brendan was kind of like, you know, like use these 4 hours, kind of try to trade as much as you can without getting shut down, right?
Fair.
And so I was just so happy I didn't get shut down. That was like my big, you know, I was super proud. But I did have this situation. I talk about this a lot. I got halted to the downside in a small cap my first day, right? So that was kind of a big opportunity. And then the more that I kind of was on the midday show, and the more, because I mostly trade on the midday, that's the thing too, I realized I really like trading these mega caps because they move quickly and I like trading within ranges.
Okay.
So then, but now my other, you know, preferred taste, my other flavor that I like the Eli Lillys of the world, I like the Netflixes. So these ones that will move very slowly and then very quickly all at once.
Gotcha.
Specifically if they do obey a range. I also think too, the longer I've been trading too, and the more I'm kind of talking to people, it's like talking to you, talking to Obi, Sean, and Neil, the other traders on the floor, Brendan as well. I get kind of more insight on what other people are looking for, and then you kind of get the sense like this is what works for some people, this is what works for other people. And the thing is too, a lot of people are gonna have different kind of trading styles, right? So you know, what works for some people is not gonna work for everyone.
So we know you like your scalping.
I do like my scalping.
Right?
That's
Scalpulation.
Yeah. Scalpulation.
Okay.
Yeah.
And what do you like as an indicator? Because we've been talking, you and I have been talking about lots of indicators as of late. Which indicator has really stuck out to you? I know you like your view up, so forget about view up for a second. Give me a different one, because that one you already. Chilean Nightmare wants view up. Oh, you hit it? Well, Katina, man, we know your affinity for view up, but she already likes view up. Let's get.
But you asked her what her favorite.
Sure. All right. Is your favorite one VWAP?
My favorite is VWAP, but I think the more I learn to work with VWAP, thank you. Yeah, because Sean asked me too. I love that. When I was on Sean, I was very grateful. Sean had me as a guest on the Market Recap show pretty early on, and was kind of like, you know, what's the best or like, you know, what indicator is the number one to kind of know. We're kind of talking about VWAP, so that's really stuck out to me. The other thing though is I think what I've learned through our conversations here in the midday as well is that, you know, it's always good to be aware of, but it's not going to actually really be relevant for every stock movement every day, right? But I really appreciate Sean for telling me, you know, this is the main one to know, because it's always going to be there. Do you know what I mean? Like, it's not like there are certainly some levels where VWAP can be really key, especially, you know, what you were saying with small caps going below VWAP. Do you know what I mean? Also, sorry, I'm just seeing Ozan and Sean in the chat here.
Bro, you never know what these guys are talking about, man.
This one.
Oh, there we go.
Wrong show.
Yeah, clearly.
That's a great button, though. I also do like that button.
Okay, number 2.
Yeah, sorry. Yeah,
what's your number 2 indicator?
That's is this mic working? That's next week's podcast. The cow comment. So, yeah, something like that. All right, back over to Sharif.
I have no comment about that.
I will laugh.
What's your second favorite indicator after VWAP?
I like volume as well, like kind of the little volume bar here, because you can see where you have like, you know, big spikes up. I also think, especially for because you asked about my scalping, I find for scalping, I really like ranges.
Okay.
You know what I mean? Okay, I'm going to use another example. I appreciate the scalp definition coming up. I'm going to go.
He's on point with that, eh?
Again, I think I need to go. I think I was scalping meta on Wednesday. I apologize for just going back to using examples, but I feel like if I have an example, it's kind of a bit easier. So for example, this little meta downward trend, I kind of waited to see a defined downward trend on this one, and then I was kind of getting in and out little tiny baby scalps on this. Do you know what I mean? Because I feel like I like to have defined ranges, and I like to take smaller pieces of the pie, especially my new strategy with these mega caps. With regards to risk, is I'll start with a really small share size. Okay. And then I'll do a couple, see how that goes. The more confident I'm feeling, I'll get a little more, and then I'll take out some. If I like, let's say I'm short scalping here, so I would like, you know, we'll get it at this top area, and then I'll get some of it out when we break when we're at the old low, and then I'll get the rest out when we make a newer low. Do you know what I mean? So I'll leave a little bit of a piece for the dream.
Beauty.
Yeah, thank you. Also, Elon in the chat, thank you. Great trading journey so far. Keep it up. Money emoji. Patrick Langlaw, why not wait and not just hop on the meta short? You were right there. Let me go back to my meta. Yeah, it is. I was gonna take this one, but like I said, like it's not, to me, this one's a bit steeper for my liking. Also, we have like 5 minutes left in the midday, and I do have other duties that I usually are doing.
Yes, ma'am, I know.
That are not on, when I'm not in the
Trading
midday.
related, yeah.
But yeah, trading, and I'm also like, taking notes. Yeah, like you're right, like stuff that isn't related to trading, especially.
Yes.
But yeah, thank you for that. Yeah, it is clearly a downward trend, but yeah. So there we go. And so what I would kind of do there is then I would get, like if I got in here, I'd get some out at this 333 bottom and then I'd save a little piece for the dream. So there we go. That's my strategy. Also, thank you, Evan11, for the 99-cent super chat. Doesn't say anything here, but thank you so much for the super chat. And also, I love your name. A great name.
It is a fantastic name. And this move on DocuSign is equally as fantastic. We are now at $62 high. We're dancing a little bit below it now. Be careful. It is a little spready. So if you're going to trade this with size, be aware of the spread because that could be your cost just for getting in and getting out. Like immediately, here comes 62. We have a 62.05 high. We're knocking on the door. I saw someone trying to do the math there. $11 billion buyout, 200 million shares, trying to theorize the price target. They could buy it at a premium, right? So you don't just assume that they're going to buy it at the current market cap. Sometimes to entice shareholders to sell their shares and to entice the board, you have to pay a premium for the shares. So just because it comes to like 50 something dollars, which is $10 or more than $10 from where we are at the moment, oh yeah, just about $10. Doesn't mean that that's what it's going to sell for. So I just want to put that there for the individual who's doing the math there in the chat. Great move by you, but just remember that sometimes in order to kind of grease the wheels and get the board on side and get the major shareholders on side, you're going to have to pay a premium for the share price. There it goes. DocuSign absolutely skyrocketing there. $62.42. It is now up over 11% on the day, blowing through these whole dollar levels at 62, 63 incoming possibly here. Let's have a look at the daily chart as we got 3 minutes left before the big kahunas come on, and I'm sure they'll be talking about this as well. Let's go to the daily here. Let's see where resistance is likely to, we're likely to encounter resistance. Let's get rid of these Bollinger Bands. They're giving me a headache. All right, so we have the most recent high over here, and this is a wick. It's not a closing print. This takes us back into mid-June. We have that $67 level. Again, that is a wick, not a closing print. The closing print on those days was both $61, above which we are at the moment. The next level I'd have to say is likely going to be 65, 66, all sorts of annoying wicks here, and I hate this type of chart where there's just so many levels you don't know which one is going to be respected. We're just going to have to wait to see what we get on the day. But here comes $63. This one absolutely rocketing to the high side. Let's go to the 1 minute and see what we're doing here. At the moment, 62.92 HOD. I think that probably gets blown through in like 2 seconds or whatever. But anyway, very strong day on DocuSign on buyout rumors. This comes to us vis-a-vis the Wall Street Journal. Here comes 63. We're at 63. Do we get prints above 63? I'm looking at the tape, and there goes 63. 63.10 now. The HOD. We literally just like smashed the at the same time, you and I. Yeah. Once, twice.
Sold for 63.
There we go. 63.19, guys. Very strong on DocuSign. Up and to the right. Nice upward channel. Be careful with this one. It is quite spready. It's about a 10 penny spread at the moment. That will be your price for just getting in and getting out at the same price. Adair, what's up?
Yeah, I know. I'm just shaking my finger at the spread. Also, yeah, thank you, Evan11, for now. $4.99 super chat. Saying here, thank you guys for the info. Thank you for the support. We love doing it. Also, yeah, DocuSign, I guess, has that long signed, sealed, and delivered there. I had to.
Killing me, man. Yeah, I use DocuSign every day in my business. We're constantly using DocuSign with vendors and with distributors. Almost nothing is signed on paper anymore. DocuSign is, it's huge. And here we go, $64 incoming, 63.88. Shout out to all my Asians, lucky number 88. Well, there it goes, $64. Oh my God. I'm not involved in this trade, but it looks like it's squeezing here, 64.18. This was really going, guys. 1 minute left on the show, Adair. I'm going to send it to you to close it off.
Friday it is. Thank you, Guntbag, in the chat for your support. Thank you always, Bears versus Bulls. Have a good weekend yourself. We learned a lot. We're going to learn more next week. Had a really great time today. For now, we shall say adieu. Sayonara. Same bad time, same bad channel next week. For now, Brendan's at the big desk.
Friday afternoon as we head towards the weekend here. We got market trying to hold, at least heading into the weekend. We are hanging